Okay, we're live. Unfortunately alive. Okay, that sounds fucking corny as fuck. But I think my camera's fine. This is my webcam right here. But I don't know. That's fucking weird. But I'm zooted right now, bro. You guys can see that shit. Like I'm fucking zooted right now. Like not on fucking DRUGS, but feels like I am right now. All I really had is fucking this bullcrap right here. It's like 5 a.m. where I live. I'm gonna become profitable and right after that fucking die because at this point I don't even think I would survive more than fucking 2 more years. You know what I'm saying? So it is what it is though. But if I can at least enjoy like a few months before I fucking die, that would be great. You know what I mean? You know what I mean? But yeah, right now I'm fucking suited. Oh my god, I'm fucking suited as fuck. If you guys can see, uh, I don't know, man. It's like I don't know if I can explain it to you guys, but I'm fucking zooted. If you guys don't know what zooted is, just fucking uh search up the definition, I guess. But yeah, that's pretty much right now, and just gotta figure something out. And yeah, that's pretty much my life, I guess. You know, starting to wonder. I mean, obviously, I'll become profitable. Like, you know what I'm saying? Like, I'll figure it out. But more than that, I think this journey has been amazing. I've loved every part of this step, every step of this journey, right? But I think, I mean, overall, my life wasn't really great. I think this was just a, I don't know, this was just a reminder of how I'm being productive at this point in my life. Because earlier, beforehand, right, I was not really productive to be honest. I was just living my life before because I was grinding Fortnite and all that. Anyways, that's basically a backstory. But my life is starting to become this every single day, right? Which means I don't know, it's weirdly because I'm fucking almost 19 years old and I have social problems dealing with people, right? Nobody's really gonna see this. I'm just speaking just in case someone finds this at some point, right? Uh, my life is not really great, right? Every single day I just survive because I have to survive, not because I want to survive. Not because I have to survive. That's because I'm not fucking dead. It's as simple as that. All right. That's literally the only reason. Most nights, almost every night, I just sit in this fucking room, just dream and execute. I'm not even executing dreaming anymore. I am executing on my plans. I'm not even planning anything to be honest. I just execute. That's what I focused on. But I wanted to just make this just in case. Um, I just misclicked some button on my computer, but um, yeah, I'm just making this. Obviously there's no one here. I can see that, which is pretty typical to be honest. I don't think anyone would really see this, but if things don't go great, I mean, I'm not saying it would go bad, right? But if things don't go great, I mean, I'm pretty sure I'll get it up there to go great. But even if I fucking imagine, even if I like end up becoming profitable and I fucking die, that I'd actually appreciate that more than just like surviving, to be honest, because it's fucking weird, right? Why is there two viewers right now? I'm not too sure, but yeah, I just wanted to like make this right now that I have viewers in here. I just don't want to really elaborate too much, but I didn't really expect anyone to join at this time of the night because it's 5:22 a.m. where I live, and typically most people are sleeping, and most of my friends are probably waking up by this time, because they have duties and jobs and things like that, and I'm out here trading and hustling, arguably working harder because even though they work, I work probably like all 24 hours on my day, right? So it's like I don't really have I mean, I'm at a point in life where if I take a break for maybe a few hours, right, it feels like a waste of time. Even right now, it feels like I'm wasting time just speaking. But when I'm watching this video, it feels like I'm productive. But I'm not really productive because I'm not really implementing this. I'm learning. Of course, that's a part of implementing, but that's not really. Trading is all about implementing in a way that you are consistently profitable. And the thing about that is not easy. Of course, nothing in life is supposed to be easy. Oh fuck, I just almost broke my shit. But yeah, nothing in life is supposed to be easy. But my life, obviously, it's not really about any trade problem. It's just that my life is sort of becoming the same shit, different day type of thing. Hopefully, I get my dreams of having the vehicle that I always wanted. If you guys know, you guys probably know what that is, and yeah, that's pretty much where my life is right now. And what the future holds, I'm not too sure. Why do I look so cooked through this my camera? That's my webcam, guys. Don't mind it. But yeah, I don't know what the future holds, but all I can say is that if I don't make it, right? If I don't make it pretty much past a certain age, even if I do end up making money, right? Even if I end up getting the things that I want in life, I still wouldn't be enjoying this life, right? It's just weird, I guess. I'm just fucked. But anyways, let's get back on the grind and just get the last few minutes. I just fucking wasted time just saying shit that I shouldn't have been saying. But anyways, let's get back on track. Nobody will really see this, to be honest, so who cares? All right, bye bye.
Our reversal in here, so we have lower low, lower high, lower low, lower high, lower low, higher high. So once we get this confirmation, it's the same thing again, right? We are high, low, lower high, lower low, lower high, lower low, higher high. Great. Before we even get into the trade, we've just confirmed, and that's what this is. And so now we shift to that. These areas will be 1 minute swing points. All of those will be 1 minute swing points. And then at some point, when the 15 minute is going to pull back, as it does, the 1 minute will shift from one direction, right, bearish, to bullish. And that is this, right? We're bearish, break of structure, and then we go bullish. That tells us that it's time to reverse. That's why we have the swing. And then again, what will happen is when price has fulfilled wherever it wants to trade into, you will be told before it happens that we are now going for this low down here because we're bearish with this exact model, where price on the way back up now, the 1 minute is bullish. And then when it shifts bearish, going for this low down here because we're bearish, again, what will happen is when price has fulfilled wherever it wants to trade into, you will be told before it happens that we are now going for this low down here because we're bearish with this exact model, where price on the way back up now, the 1 minute is bullish. And then when it shifts bearish, right, when it changes from bullish to bearish, when it goes like this, so it's looking like this, and then it goes like this, that is your confirmation, because we've had high, low, high, 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 low, high, high, lower, low, change of character, right? So everything you just learned in the first steps applies to every single time frame, right? That becomes a change of character. And now we know, before it's even got there, that price is going to take out this low down here. So those 1 minute shifts, bearish, break of structure, and then we go bullish. That tells us that it's time to reverse. That's why we have the swing. And then again, what will happen is when price has fulfilled wherever it wants to trade into, you will be told before it happens that we are now going for this low down here because we're bearish with this exact model, where price on the way back up now.
Basically, on the 15 minute, you would see this. On the 1 minute, you would see this, because this is an indication of a market structure shift. When this is broken and it pulls back, uses this to go lower.
Now, the 1 minute is bullish. And then when it
but obviously context it needs to be applied,
shifts bearish, right? When it changes from bullish to bearish, when it goes like this, so it's looking like this, and then it goes like this, that is your confirmation. Because we've had
pullback, entry. So I'm expecting price to do over here. So I'm expecting price to low key pull back towards over here, and then sweep the liquidity and then go lower. Higher towards this draw on liquidity. And yeah.
high, low, high, 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 low, high, high, low, low, change of character, right? So everything you just learned in the first steps applies to every single time frame, right? That becomes a change of character. And now we know, before it's even got there, that the price is going to take out this low down here. So those one bearish break of structure, and then we go bullish. That tells us that it's time to reverse. That's why we have the swing. And then again, what will happen is when price has fulfilled wherever it wants to trade into, you will be told before it happens that we are now going for this low down here because we're bearish with this exact model where price on the way back up now, the 1 minute is bullish. And then when it shifts bearish, right, when it changes from bullish to bearish, when it goes like this, so it's looking shift from one direction, right, bearish to bullish. And that is this, right? We're bearish, break of structure, and then we go bullish. That tells us that it's time to reverse. That's why we have the swing. And then again, what will happen is when price has fulfilled wherever it wants to trade into, you will time frame. When it does that, the 1 minute time frame will look like this, right? And all of these areas will be 1 minute swing points. All of those will be 1 minute swing points. And then at some point, when the 15 minute is going to pull back, as it does, the 1 minute will shift from one direction, right, bearish to bullish. And that is this, right? We're bearish, break of structure, and then we go bullish. That tells us that it's time to reverse. That's why we have the swing. And then again, what will happen is when price has fulfilled wherever it wants to trade into, you will be told before it happens the one pattern every single time. And that pattern is this, what that looks like. So
yikes, dude.
Stay focused on one time frame because it won't give us a full trade. To see that this low gets broken now, they all of a sudden think, okay, time to go short. And so what happens? They try to short from here, and then they get stopped out again. And so they've been stopped out trying to long, and then they shift thinking it's time to go short, and then they get stopped out trying to short, all because they didn't have this system in place, this principle in place. And that takes us into step number 4. So now we have essentially dealt with the basics. We can get into the more advanced concepts. In here, we're going to be looking at fractal market structure. You see, we have multiple time frames. We can't just stay focused on one time frame because it won't give us a full picture, a full understanding. And if we want super small stop losses and large risk to reward, then we need to have been stopped out trying to. In here, we're going to be looking at fractal market structure. You see this principle in place, and that takes us into step number 4. So now we have essentially dealt with the basics. We can get into the more advanced concepts. In here, we're going to be looking at fractal market structure. You see, again, and so they've been stopped out trying to long, and then they shift thinking it's time to go short, and then they get stopped out trying to short, all because they didn't have this system in place, this principle in place. And that takes us into step number 4. So now we have essentially dealt with the basics. We can get into the more advanced concepts. In here, we're going to be looking at fractal market structure. You see, we have multiple time frames. We can't just stay focused on one time frame because it won't give us a full picture, a full understanding. And if we want super small stop losses and large risks, and that takes us into step, okay, time to go short. And so what happens? They try to short from here, and then they get stopped out again. And so they've been stopped out trying to long, and then they shift thinking it's time to go short, and then they get stopped out trying to short, all because they didn't have this system in place, this principle in place. And that takes us into step number 4. So now we have essentially dealt with the basics. We can get into the more advanced concepts. In here, we're going to be looking at fractal market structure. You see, we have multiple time frames. We can't just stay focused on one time frame because it won't give us a full picture, a full understanding. And if we want super small stop losses and large risk to reward, then we need to have a higher time frame and a lower time frame. And we use, and if we want structure, you see, we have essentially dealt with the basics in place. And that takes us into step number 4. So now we have essentially dealt with the basics. We can get into the more advanced concepts. In here, we're going to be looking at fractal market structure. You see, we have multiple time frames. We can't just stay focused on one time frame because it won't give us a full
8:30 in the morning. Oh, that's wild. Today's a bank holiday, so not expecting price to be moving much today, but I am, however, expecting to take a trade on Bitcoin because, you know, it's the crypto market, obviously. And yeah, market's obviously open, but it's a bank holiday, so I'm not really trying to trade this. But I will, in fact, trade this. Okay. Alright, so we took out all these lows, right? We took out all these lows. We have a bullish bias overall. We have this breaker structure right here. Pullback, breaker structure, pullback, breaker structure towards overall a higher bullish bias, right? So obviously we took out these lows with this. These lows wasn't taken out. So I'm expecting a price rebalance at this and then go higher right after, because you see this price rebalance over here. See this liquidity taken out, right? And I'll expect a price rebalance over here, and then right after, just right after, just reversal. Oh, my bad. There we go. So yeah, that's pretty much where we are trying to long towards this point. So I'm trying to long this from here towards the. They're going to get you, Barbara. Alright, right here. The 1 to 13.7, but I'm expecting a partial. So somewhere around 2, somewhere around close to 7, right? So basically right here, you can see that this is a manipulation. Further gap manipulation. See a distribution right after. We have another order block created over here. See this further gap which is wicked into. And I'm expecting I could honestly TP even at this swing high. I'll say. But this is overall just for a bias, so I don't really care what this is doing. But what we do know is it's gonna be bearish and then bullish right after. Now, what do we look for in the 4 hour? 15 minute? You can see that this is market is in fact, let's look at the structure overall. So you can see that this is the structure of the market. Reversal all the way down here. You can see that this is a bullish structure. And you can see this internal gem low, which is broken over here. And we see this bearish structure, which is having a bit of a epilepsy over here, rebalancing this fair value gap, right? And it's going lower. Anyways, that's besides the point, because now we know the market is in fact bearish, right? As you can see, this is bearish. So overall, it didn't break this interim high. So for as long as that's not the case, we don't want to be longing, right? So as you can see, it's breaking structure towards the downside once again, right? Until this point, which is a temporary sweep, we have a breaker structure. So overall, we're shorting towards this point. Okay, we're shorting towards this point. So let's look at any 15-minute fair value gaps over here. So we seem to have this fair value gap. We seem to have a price balance over here. So I'm expecting to short this market from here all the way down towards this low, because this is where I'm expecting at least towards this low, 6.1. I'm gonna get in this trade and then just like go to sleep, because we have an order block over here, right? We have an order block over here. So even if I'm gonna put my stop loss right here, I get a 2.78. It's a pretty enough stop loss, but yeah, because it's gonna take this low and then pull back towards this. If I can entry here though, I can like short this market all the way towards the drawn liquidity, which is over here, because this low needs to be taken out. And overall, we know the price needs to rebalance this, so that's why we're pulling towards this, right? They're going to get you, Barbara. I know why, but just like that shit just rhymes in my head. But yeah, basically, we know for a fact that price is going to be bearish until then. So yeah, I'm gonna put a pending order, right? I'm gonna put a pending order. Of course, my fucking account's kind of fucked right now, but anyways, I'm just gonna put the pending order right here. This swing right here. Let's target this swing stop loss, and let's go towards the 4-hour. Buy side liquidity draw over here. Over on the lows over here. So you can see that if I do a 0.5, if I just press like 0.3, I can still make a pretty good like $100 out of this trade. So yeah, that's usually like the usual amount that I risk is this. So yeah, this is basically the shot that I'm taking. So I'm just gonna put this on my journal just to like, you know, just to have an idea. Anyways, you can see that this range has been retested, so I'm expecting a retest right here after price does in fact go lower, right? So I'm expecting a, let me just get rid of this fucking line. Oh, I can't get rid of it. That's interesting. Anyways, I'm expecting a price sweep, right? Sweep. Maybe this fair value gap or this fair value gap. But ideally, I would expect a pullback towards, honestly, yeah, this fair value gap is fair. Because this wasn't, you know, this wasn't tested before. Yeah, I'm expecting a retest over here. I'm expecting a retest over here. But these are the up close candles before the downwards move though. So that's the only doubt that I have, because usually this is a pretty good zone to be shorting off of. Because once I see this manipulation, honestly, yeah, I'll just like put the short over here. But nah, if I was targeting these lows all the way down here, I wouldn't be yeah, if I was going for this swing to this swing, yes, sure. If I was going from here, like here to like all the way down there, nah. I just stick to my usual, you know, risking from this swing. Where is it? Where's my swing? Where's my stop loss? I have no idea where I put my stop loss. Wait 15 minutes. Yeah, so as you can see, this is, wait, what the fuck? Why is my TP above my stop loss? What? It's not a sell order. You fucking retarded. Stop loss. Okay, so if I put my stop loss here, yeah. If I put my stop loss below, then yeah, I mean, it makes sense because I went for a sell order over here, right? So then I'll go for a buy order right here. Where is it? Like basically below, right? So it makes sense because I went for a sell order. So yeah, that's right. Because I know for a fact it's gonna like keep gonna short the market until then. So yeah, price is in fact going to be pretty bearish until then, right? I might buy some like actual Bitcoin to hold in my wallet at this point. Once I see an interim high be broken, because I don't want to be losing money. Call that shit an investor ass bitch. Yes sir. 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 Alright, anyways. You can see that this will be tapped into and then goes lower from this manipulation. So this is manipulation and the distribution like right after. Anyways, let's get back on track.
Picture all of a sudden think, okay, time to go short. And so what happens? They try to short from here, and then they get stopped out again. And so they've been stopped. Slow gets broke, right? Because this was the swing low. Break of structure up here. Now you can see that price puts in this high, it puts in this low, and then it puts in this high. Now a lot of traders will use this as their break of structure, but that is a fake pullback. That's a fake break of structure. It's a question I get asked so many times. How do I know real versus fake? This is it. This is one bearish candle, two bearish candles, and then we have bullish candles to the high, which means that this area in here is not a low. That means that this is still the low. And so again, remember what I just said, a lot of traders will now be looking at, for example, trying to trade this level, right? When in reality, that this is our swing low. And so what you'll see a lot of the times is you'll see price will come back and maybe give them their little reaction to get them into the market and then liquidate them. And they're left thinking, what happened to me? When in reality, price did this, right? Because this was the swing low. And maybe there was something else that sat at these lows. And so what you'll see a low, I just said, which means that this area in here is not a low. That means that this is still the low. And so again, remember what I just said, a lot of traders will now be looking at, for example, trying to trade this level, right? When in reality that this is our swing low. And so what you'll see a lot of the times is you'll see price will come back and maybe give them their little reaction to get them into the market and then liquidate them. And they're left thinking, what happened to me? When in reality, price did this, right? Because this was the swing low. And maybe there was something else that sat at these lows, right? And then again, what happens? When traders see that this low gets broken now, they all of a sudden think, okay, time
The order block, yep.
to go short. And so what happens? They try to short from here. And then they get stopped out again. And so they've been stopped out trying to long, and then they shift thinking it's time to go short, and then they get stopped out trying to short, all because they didn't have this system in place, this principle in place. And that takes us into step number 4. So now we have essentially dealt with the basics. We can get into the more advanced concepts. In here, we're going to be looking at fractal market structure. You see, we have multiple time frames. We can't just say focus on one time frame because it won't give us a full picture, a full understanding. And if we want super small stop losses and large risk to reward, then we need to have a higher time frame and a lower time frame. And we use the lower time frame for our confirmation. Let me show you what that looks like. So as we now know very clearly, right, just follow me, forget all the noise around, follow me. We have a high up here, and then price puts in a low. And then price puts in a high. And then price puts in a low, and then price puts in a high. So we know this is our reversal, right? We know that we've gone from bearish to bullish. Great. Now notice that in black is the 15 minute, and in blue is the 1 minute. That's what they represent. Now what I want to explain to you is very, very important, so listen closely. At every swing point, right, so every point where you see a reversal, on the lower time frame, you will see one pattern every single time, and that pattern is this, right? Because think about it. If the 15 minute is putting in this one price leg, the 1 minute time frame, when it does that, the 1 minute time frame will look like this, right? And all of these areas will be 1 minute swing points. All of those will be 1 minute swing points. And then at some point, when the 15 minute is going to pull back, as it does, the 1 minute will shift from one direction, right, bearish, to bullish. And that is this, right? We're bearish, break of structure, and then we go bullish. That tells us that it's time to reverse. That's why we have the swing. And then again, what will happen is when price has fulfilled wherever it wants to trade into, you will be told before it happens that we are now going for this low down here because we're bearish with this exact model where price on the way back up now, the 1 minute is bullish. And then when it shifts bearish, right, when it changes from bullish to bearish, when it goes like this, so it's looking like this, and then it goes like this, that is your confirmation because we've had high, low, high, 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 low, high, high, lower, low, change of character, right? So everything you just learned in the first steps applies to every single time frame, right? That becomes a change of character. And now we know, before it's even got there, that price is going to take out this low down here. So those 1 minute shifts are our confirmation that price is about to reverse. And then you see it again, right? You see that this time round, we have this low down here. And again, you can see it's a swing. What makes it a swing? You'll see this exact pattern. You'll see that as price comes down on the 1 minute time frame, you'll see low, lower high, lower low, lower high, lower low, lower high, lower low, high, high, right? You'll see that exact pattern time and time again. The 1 minute will be bearish and then it will be bullish, right? And then when you take out this high right here, now our strategy is what needs to be discussed. So let's go ahead and get into the actual trading strategy that you're going to be using to get profitable. So here is the trading strategy that you are going to be using that will get you profitable. And after this step, I'm going to show you a live example on GU trading this exact trading strategy to show you how it's done in the market. Let's go. So again, same thing, the trading strategy. We have the M15 in black, the M1 in blue, and we have, so we have that. And now let's look at things, right? We have the exact same pattern. We have the high, we have the low, we have the lower high, lower low, higher high, right? So forget everything past this high. We are bearish, and then we shift bullish, right? The 15 minute is bearish, and then the 15 minute becomes bullish, right? So after the break of structure, the change of character in this case, after the change of character,
pullback entry. That's what he's talking about.
the price will stretch up to some level, and then what will you see? When it's ready to pull back, right? Because it needs to do this, when it's coming to do this, you will be confirmed and told before it happens with this. On the 1 minute time frame, you'll be able to look at this area and you will see this. You'll see as the 15 minute comes up, the 1 minute inside of this price leg right here, the 1 minute is going to be bullish. You're going to see this, right? And then when it gets to the high and it's time to reverse, whenever that is, you'll be shown because you'll see, okay, we're bullish, and then we're bearish, right? Change of character, break of structure, change of character. Now we're going to be bearish, and that's what this is. And so now we shift to that in blue, like this, you see. And the reality is you also probably have some sort of internal liquidity, which I've spoken about in a lot of videos, and we also teach very clearly inside of our programs. We have this internal liquidity, and then we want to see a push down into an order block, right? An area of interest. And now, don't worry, if you don't know what an order block is, I have lots of videos on these, and I also teach it inside of my programs. So don't worry, if you don't know right now, we can get you to know. But I'm assuming a lot of you do know. So you'll see an order block in this level. These order blocks are going to act as resistance areas for price. When price gets into these levels, it won't be able to trade through them if you choose the right one. Block in this level on these, and I also teach it inside of my programs. So don't worry, if you into an order block, right? And we also teach very clearly inside of our programs. We have this internal liquidity, and then we want to see a push down into an order block, right? An area of interest. And now, don't worry, if you don't know what an order block is, I have lots of videos on these, and I also teach it inside of my programs. So don't worry, if you don't know right now, we can get you to know. But I'm assuming a lot of you do know. So you'll see an order block in this level. These order blocks are going to act as resistance areas for price. When price gets into these levels, it won't be able to trade through them if you choose the right ones. Of course, the same structure. You have to have rules, and I have rules for everything. So when price meets my order block levels, it won't be able to trade through them if you choose the right ones. Of course, level. These order blocks are going to act as resistance areas for price. When price gets into these levels, it won't be able to trade through them if you choose the right ones. Of course, the same structure. You have to have rules, and I have rules for everything. So when price meets my order block, what's going to happen is as it comes down, the 1 minute time frame is bearish, right? You can see we have our reversal in here. So we have lower low, lower high, lower low, lower high, lower low, higher high. So once we get this confirmation, it's the same thing again, right? We are high, low, lower high, lower low, lower high, lower low, higher high. Great. Before we even get into the trade, we've just confirmed that now it's time to reverse. But here's where it gets interesting. Because we are bullish on the 15-minute time frame, we already expect that the 15-minute time frame is going to do two things. Number one, respect this low, and number two, target this high. Right? It's that simple. And so when we get in here and we get our confirmation, we always wait for confirmation. Now, this is our confirmation to tell us that actually price is going to go and take the high right now. And that is our trade. Once we get this, we wait for a little area of order block on the 15-minute or some area of interest, which I'll show you in just a moment. And then we get into the trade with our stop loss in a protected area. And then we just trade up into this area right here and target a minimum of 1 to 5 risk reward. So let's go over to the charts and dive into this strategy. Okay, so here we are on GBPUSD on the target a minimum of 1 to 5 risk reward. So let's go over to the charts and dive into this confirmation. We always
I don't know if you guys can see this, but if you guys can see this shit, fuck. Me. Oh fuck. I look zooted as fuck. But if you guys can see, oh my god, my camera is gonna get fucked up. But ironic, because this is my real camera right there. But you guys can see, it's starting to fucking. It's like almost morning at this point. As you can see, it's starting to like. Let me just like show you guys. Right outside it. Right. You guys can see that. See that? Yep. That's right. It's fucking bright outside. Just have like something. But anyways, I'm gonna turn off the lights. It's pretty cool as fuck. That's it. That's it. Oh man. You guys are about to see the fucking sun. Alright? We're about to see the sun. Okay. So right now, it is fucking dark outside. I mean, almost. It's almost like it's basically like dawn at this point. As you guys can see. That right there, that light right there is basically the road. And yeah, it's pretty fucking cool. If I can show you guys like the outside right now, that would be so cool as well. But anyways, let's get back to trades, and it's, you know, that would be cool as fuck, you know, streaming until like dawn. It's like super, I don't know, at least in my opinion, it's like super, I don't know. Anyways, let me just stop this. Okay.
always wait for confirmation. Now, this is our confirmation to tell us that actually price is going to go and take the high right now. And that is our trade.
This is fun. Like low-key streaming, even though there's like nobody right now. It's like, this is fun, you know.
And number two, target this high, right? It's that simple. And so when we get in here, we have our reversal in here. So we have lower low, lower high, lower low, lower high, lower low, higher high. So once we get this confirmation, it's the same thing again, right? We are high, low, lower high, lower low, lower high, lower low, higher high. Great. Before we even get into the trade, we've just confirmed that now it's time to reverse. But here's where it gets interesting. Because we are bullish on the 15-minute time frame, we already expect that the 15-minute time frame is going to do two things. Number one, respect this low, and number two, target this high. Right? It's that simple. And so when we get in here, when we get our confirmation, we always wait for confirmation. Now, this is our confirmation to tell us that actually price is going to go and take the high right now. And that is our trade. Once we get this, we wait for a little area of order block on the 15-minute or some area of interest, which I'll show you in just a moment. And then we get into the trade with our stop loss in a protected area, and then we just trade up into this area right here. And target a minimum of 1 to 5 risk reward. So let's go over to the charts and dive into this strategy. Okay, so
I need to get a screenshot of this. This is so fucking cool though. I don't know. I'm enjoying this. Believe it or not, like especially like in the dark, it's like so fucking fire. This is kind of comedic, low key. But anyways, I'm streaming right now. Pretty sure it's like pretty early. I mean, pretty late for Zero though. I think it's like evening at this point. Streaming right now. It's like,
and then we just trade up into this
you see, this is going to be the manipulation distribution, like right after
area right here, and target a minimum of 1 to 5 risk reward. So let's go over to the charts and dive into this strategy. Okay, so here we are on GBPUSD on the 15-minute time frame, and what you can see is that we were very bearish. The first thing that we need to do is mark our structure points. So we're going to go from swing low that has at least 3 candles in it up to the swing high, and then what do we have? We have a break of structure, the downside, right? Break of structure. And again, a lot of traders will make the mistake of thinking that now this is the low and then this is the high, when it's not, because it's just one candle. So we need to wait for 3 candles. So this is the high. Now we come down to this low, and then we have thinking that now this is the low and then this is the high, when it's not, because it's just one candle. So we need to wait for 3 candles. So this is the high. Now we come down to this low, and then we have 1 bullish candle, 2 bullish candles, 3 bullish candles. So there are 3 candles in that sequence that break and close above each other. That is a valid pullback. So now we can go lower low, lower high to lower low, right? Again,
This is a breaker block. And then you see this fair value gap, boom, taps back into it, goes higher towards it.
that now becomes our break of structure, and then this becomes our change of character. So now we've shifted to bullish, and now we're looking for longs. And again, a lot of people will make mistakes because they may not even use this. They may think that structure is from this high.
Yo, it's low key starting to become like, it's low key slowly starting to become day. That would be so fucking cool if I can like stream until like it's sunlight out there, and then I just go to sleep. That'd be fire. That would actually be fire, low key. I don't know. That would be fire.
High to this low. And now what are they doing? They're looking to short, and where their stop losses are going to be. Their stop losses are going to be up here, where we are probably going to take price into. So again, listen very carefully. So once we get the reversal, right, now we're bullish. We have lower low, and then we have high high. So we need to map our trading range. It's very simple. This right here is our trading range. We trade from this low to this high, and it's as simple as we are expecting the price will come down a little bit further, and then give us our confirmation from an area of interest. So we're going to map out as we are expecting the price trading range. It's very simple. This right here is our trading range. We trade from this low to this high, and it's as simple as we are expecting the price will come down a little bit further, and then give us our confirmation from an area of interest. So we're going to map out number 1. This is 1 order block. Number 2 as a second order block. Right. So these are 2 areas of price that I'm interested to see price react from.
Ideally from here, because this fair value gap could be targeted, manipulated, and then distributed right after.
And it becomes a little bit lower, not a problem. We're just waiting for the reversal on the 1 minute time frame. So we're on the 15 minute time frame. Now I'm going to turn on my indicators. This is something that I use every single day. It's just a session indicator. Just so you know what time you're obviously trading, because, you know, as someone who trades only London session, you're never going to see me taking trades in Asia or random trades. I want to show you this to prove that it's in my actual strategy. It's in my actual time window. I'm not just finding a random piece of price delivery. It's my actual trading hours. So let's go. So what we have now is it's Tuesday, the 23rd of April. You can go and find this price delivery for yourself and practice if you would like to. It's Tuesday, and in this blue box right here, we have Asia session, right? Asia session high and Asia session low is always very high liquidity. So what we can do is we've already taken out the Asia session low, so we call this a liquidation. And now what we're going to wait for is a run of Asia session high. So great, we're building a lot of confluences now because we're bullish, so we're expecting high prices anyway. Plus we have the bonus of run of Asia session high. So liquidity. So what we can do is we've already taken out the Asia session low, so we call this a liquidation. And now what we're going to wait for is a run of Asia session high. So great, we're building a lot of confluences now because we're bullish, so we're expecting high prices anyway. Plus we have the bonus of targeting Asia session high, which again is an extreme bonus because it's an area of liquidity.
Yeah, that's right.
Now, as price is pulling back, we've created liquidity on the sell side. We had an old low down here. Old lows and old highs always act as liquidity. So it's amazing. We have liquidity to take out to come into our area. So in the day of this trade, when I get to the markets before anything has happened, already instantly what I'm looking for is I'm looking for a run of this low. I'm looking for a 1 minute shift inside of here, and I'm just looking to take out the next high. That's it. It is literally that simple, right? So let's take a look. If we play price inside of here, I get to the markets before anything has happened, already instantly what I'm looking for is I'm looking for a run of this low. I'm looking for a 1 minute shift inside of here, and I'm just looking to take out the next high. That's it. It is literally that simple, right? So let's take a look. If we play price out on the 15 minute time frame, you'll see that Frankfurt closes. So in this red box here is Frankfurt.
There's a Frankfurt session? That's crazy. I don't want to overcomplicate things. It's like Tokyo, Frankfurt, and like, yeah, I just want to stick to the mains. Because like, if you don't really need to give a fuck about the other sessions.
Now I come in here when it turns green, which is London session, my session. So when I come into London, I get here a little bit early. When I get into London, I already have my bias. I already want to trade high. We're bullish. I want to trade longs. We already had my liquidation. I have my targets. I have my point of interest. All I need now is one of this low. I'm looking for a 1 minute shift inside of here, and I'm just looking to take out the next high. It's always act as liquidity. So it's amazing. We have liquidity to take out to come into our area. So in the day of this trade, when I get to the markets before anything has happened, already instantly what I'm looking for is I'm looking for a run of this low. I'm looking for a 1 minute shift inside of here, and I'm just looking to take out the next high. That's it. It is literally that simple, right? So let's take a look. If we play price out, and I'm just looking to take out the next high. That's it. It is literally that simple.
It's basically waiting for a market structure shift on the PD array, like PD array reaction, 15-minute PD array reaction, basically an order block. So this is 15 minute, and this is what he's expecting on the 1 minute, right? So he's basically waiting for a 1 minute, basically a market structure shift, PD array, rebalance over here, manipulation, fair value gap manipulation, and we see the distribution like right after towards these highs. Boom, TP, right? Distribution right here. As you guys can see, pretty fucking simple, right? 1 minute, pretty fucking simple. Just paste this shit real quick, but you get the point.
Right. So let's take a look. If we play price out on the 15-minute time frame, you'll see that Frankfurt closes. So in this red box here is Frankfurt. Now I come in here when it turns green, which is London session, my session. So when I come into London, I get here a little bit early. But when I get into London, I already have my bias. I already want to trade high. With bullish, I want to trade longs. We already had my liquidation. I have my targets. I have my point of interest. All I need now is my confirmation. And as you guys know, my confirmation is the 1 minute shift. So on the 15-minute time frame, you can see that we are bullish, but we are pulling back internally. On the 1 minute time frame, this is going to be bearish because it's just zoomed in. So if we go to the 1 minute time frame, right, and we look, you can see that price was bullish and then it shifted bearish. And you can see very clearly that the M1 is bearish. And so if we zoom in, again, same rules apply. If we zoom in, we'll just start from our low down here, right, to a high up here, which has at least 3 candles in it. Then we go lower low, then we go lower high, then we go lower low, and we have 1, 2, at least 3 candles, high high. Come into here, lower low. Does that give us our candle plan? No, it does not. That is not 3 candles, right? So great. That doesn't become a low. So it is low, high, lower low. So right now, that is what we're dealing with. Let's continue playing price and play it through bar by bar. So what do we just have right here? We have lower low, lower high, lower low, and then we have change of character. So you can very clearly see that we were bearish, right? On the 1 minute time frame, we've just been bearish. We have break of structure. We have break of structure, right? Price is bearish. To confirm that this area is going to hold, that smart money is active in.
This is a market structure shift. This is the PD array, obviously. And we see a market structure shift right here above the internal term high. Okay. So for example, like let's say right here, right? It trades above this. This is the internal term high. Right? This is the internal term high. And when it trades above this, I'm expecting price to low-key tap back into this fair value gap, right? This fair value gap. And then this manipulation, fair value gap manipulation, and we see a distribution like right after. So D and M right here. Okay, so we see the fair value gap manipulation, and we see this buy side of the curve form towards the drawn liquidity. Right, so you guys can see that this is the buy side of the curve. Market maker, sell, buy model right here. Simple. It's pretty fucking simple. And you see this over and over.
Area, we need to see this shift because all this represents right here.
Even this I mean, this is really the market structure shift. So yeah, you don't want to misunderstand this with this, because this right here is dangerous. This is the real internal term high, and you want to wait for an internal term high to be broken, not for a normal fucking short term high to be broken. This is a short term high. This is where the fuck is the other short term high? This is a short term high, internal term high. Good. Market structure shift, pullback, taps into fair value gap, goes higher. Fair value gap manipulation happens in the higher time frame PD area, 15-minute PD area. This is the 1 minute entry from this fair value gap, targeting the buy side liquidity draw. Simple as fuck. 15-minute buy side liquidity draw. Simple as fuck.
Is okay. Sellers are aggressive, sellers are aggressive, sellers are aggressive, buyers are aggressive, and we want to be buying, and we want to be stepping in and using the momentum of the buyers. And so now what I need to do is I need to find an entry. So typically what you'll see me do is I'll just look for the area in which we buy to sell, right? And so this range right here, this buy to sell into this level, that
manipulation like
area reacts, that area acts as an area of support. If you're like price will like a respect here. What I usually
right, interesting. The manipulation like will act.
buy to sell into this level, that area reacts, that area acts as an area of
the manipulation like area will act as a how do I explain this?
To sell, right? And so this range right here, this buy to sell into this level, that area reacts, that area acts as an area of support. If you're like price will like a respect here. What I usually do is I'll go to the 5-minute time frame. So just like this, I'll go to the 5-minute time frame and I'll look for an order block, right? And again, the typical order block that you would see would probably be this candle here, and this ended up being around about 3.5 pips, around about 3.5 pips. And so again, this is where a little bit of discretion comes in, just your entry. I would just look for the perfect order block, which is this, right? The final sell before the aggressive candle comes into the market, which you can very clearly see. And I just want to put my entry on here. I just want to put my stop loss below the lows, right? 5.2 pips, and simply put my first take profit on this time frame. I just want to go for the highs in here, and I need to make it a minimum of a 1 to 5, right? Risk 1%, gain 5%. That would be my trade.
Go for it, bro. I mean, he has been trading for a while, so it makes sense. This guy looks like he's 18 but 24 at the same time. I don't know.
And so we come back again on the 1 minute time frame.
I really can't tell how old this guy is based off his like appearance, low key.
Need to see now is I need to see price respect this level. I need to see price tag into this level. So we have our targets. And again, if I make this very clear for you, if we just go back to the 15-minute time frame and look at what this looks like, if we zoom out, it is literally just everything we've been.
If you guys can see now, it is. It's like the time frame alert at this point. Like, look at this shit. Call this shit the time frame alert. Okay, you guys can see that. It's fucking bright outside, bro. My fucking webcam's so shit, but you guys can see that. It's fucking bright outside. As you guys can see, like, that's the next door. Hey neighbor, what's good? You guys can see that that is the fucking road. This is my fucking setup. You got the monitor, as you guys can see. So this is where I usually stream from. So as you guys can see, this is my fucking laptop. This is where you guys are usually, and this is where I see everything that happens. I usually have this on like performance mode. Right now I have this like, you know what I'm saying, like this. And yeah, I have this right now because I want to see the preview and make sure everything is good. So as you guys can see, this is where I stream. This is my mic. As you guys can see, this is where I speak. Hello, hello, hello. What's up? What's up? Hello. And this is where all the magic happens. I usually don't have my keyboard's backlight, but this is my keyboard, mouse, monitor. This has not been turned on since eternity because I still couldn't fix my PC. So yeah, props to that, I guess. I couldn't fix this shit, but yeah, it's bright outside, as you guys can see. Got a fucking roof. It is pretty fucking dark in my room right now. If you guys can see that shit. If you guys can see that shit right there. Pretty fucking dark. So yeah, it's like 6:05 right now. So makes sense why it's like so fucking dark right now, but yeah, you get the point. So anyways, let me scale this down. Let's get back on the grind, man. Let's go. I can't speak. But yeah.
Been doing, right? It is literally protected low, targeted high. We've come down, and now we're just going for a high. And the way
manipulation, fair value gap, PDR manipulation in this case, because this is not a fucking fair value gap.
Confirm the high is our 1 minute shift. That's it. And now we're just gonna wait for this to this. It's all market structure with a little bit of details of liquidity, of timing, of order blocks, supply and demand, just those little finishing pieces, again, which you can learn them all on the YouTube channel or even inside of our mentorship programs of order.
Okay. Loki might, like, if I become profitable, obviously I'll like put some money into her, get some mentorship, you know what I'm saying? So yeah, basically 15-minute PDRA reaction order block. In this case, low time frame, inter-term high broken, clear MSS. Plus pullback entry, Fiji entry for its 15-minute buy-side liquidity draw with context applied, of course. Alright, so that's basically where I'm going to. Yo, it's actually fucking. I'm gonna stream until it's like there's sunlight outside. I've been streaming for about an hour so far. But
order blocks, supply and demand, just those little finishing pieces, again, which you can learn them all on the YouTube channel or even inside of our mentorship programs. So okay, let's continue to see how price delivers itself. Again, no pullback in here. Again, just a wick, right? No break of structure. That's a liquidation. A run of the highs, liquidation. And then price comes to tag us in. And so we're expecting that price should react from this level because we've just shifted bullish and target is high. Now, if you lose, you lose.
I would low-key just look at this fucking fair value gap and just be like, yeah, you know what? I'm just gonna entry here.
You're gonna lose trades, it's part of the game. But if you win, awesome. Right, all about strike rate. So at this point, I would look at taking my stop
I mean,
loss.
you could literally just fucking entry here, dude. You're not missing much. This guy wants the 1 to 5 on point.
break even.
Okay, mister.
And there is the trade in full. Take profit here, 1 to 5 risk reward. If you enjoyed
Pretty
the video
simple,
and you want to learn
yeah.
more about these types of strategies and smart money concepts, in this video, I'm going to share with you a step-by-step
I
smart
watched
money
this, yep.
inside of the range, take the final candle before the aggressive move up, and you want to map out the high of that candle in a bullish scenario. So what will happen, they'll institutional one or something, some entity, institution, corporation with a lot of buying power has stepped into the market, showing you that it positioned itself to go higher. So with that,
Yeah, so you look at the overall structure on the 4-hour. If you see the overall 4-hour structure, it's pretty fucking simple. Because you see this, right? This is bullish, obviously, right? You see this bearish structure, but then you see this long-term, internal term low, right? This is a short-term low, internal term low. This fucking big dick guy, right? If he gets his dick wanked off, that's when you wanna like look for a market structure shift. But obviously in this case, we have a bunch of confluences as to why that won't be the case, right? Unless it takes out this high over here. Pretty fucking simple, right? So obviously we have a bearish bias as of right now, but we know overall, even on a bigger scale than the 4-hour itself, where the fuck 4-hour is going to be heading towards. That's pretty fucking simple, right? So yeah, as you guys can see, we have a bearish bias, and yeah, this is exactly what I'm expecting price to do. Low key, high key, key, do you love me? All right, whatever. I'm running on 0 sleep right now. I haven't slept since yesterday, so yeah, pretty cool. More than 12 hours for sure. So yeah. Anyways, you guys can see I have a bigger prediction than just fucking predicting what's gonna happen in the next fucking half an hour. I have a overall analysis of the fucking market, so I can literally take a spot trade on crypto and fucking make some bang. So pretty fucking simple, right? Pretty fucking simple. It's literally textbook right now. So this low needs to be fucking swept, and this is coincidentally a order block, untested order block. If you guys look at this, for example, like over here, this is a fucking untested order block over here. This has been retested, manipulation, distribution, like right after this demand level order block has not been retested. Simple as fuck. All right, as you guys can see. So once I see a retest, I will entry and go much higher. But in right now, after this, I'm expecting to short the market, right? Pretty fucking simple. But yeah, that's pretty much it, guys. Get this in my head properly.
That being said, they have so much money that it's difficult for them to fill all of their orders at that specific level. As much as their orders as they can before price gets too high, and now they no longer want to put the rest of their orders in because price is much different than it was. So what will happen, they'll let sellers come back into the market, and when price comes back into the same area that they first bought from, they'll initiate the rest of their position, right? What specific level? A lot before the aggressive move up, and you want to map out the high of that candle in a bullish scenario. And then once you've had the aggressive move, you want to map out the next candle's low, like this. And if there is a gap between the high of candle 1 and the low of candle 3, you have what is called a fair value gap. Simply put, what's going to happen is at some point in time, that gap is going to be filled. And it will likely look something like this. Price will come in back into this exact candle just before the aggressive push up, and then we'll get the continuation out of that move. The reason behind this is simple. This is where a large institutional player stepped into the market. Someone or something, some entity, institution, corporation with a lot of buying power has stepped into the market, showing you that it positioned itself to go higher. So with that being said, they have so much money that it's difficult for them to fill all of their orders at that specific level. As much as their orders as they can before price gets too high, and now they no longer want to put the rest of their orders in because price is much different than it was. So what will happen, they'll let sellers come back into the market, and when price comes back into the same area that they first bought from, they'll initiate the rest of their position, right? What this does is it enables them to get as many of their dollars at this specific price point as they can, instead of getting some of their dollars in here and the rest of their dollars in here. It's a very, very simple understanding of the market dynamic that we have with institutional players. So what we want to do is we want to identify this area of interest and look at when price gets back into here, what happens in here. If we get our confirmation, that's when we're looking to trade this level. And I'm going to show you what that confirmation looks like later in the video. That is an area of interest. It's the range and then aggressive expansion, and then we have this gap in the middle called the fair value gap. If price comes back into this level, that could be a key potential area of interest for us. Now the same is true for the opposite side of the market. Here on the right hand side, we have essentially is this concept of range, aggressive move, right? And then this aggression here shows us that a large institution has just stepped in and filled a bunch of orders at that level. They are showing you where they want to go. They've already shown you, look, here's my hands, I'm going short. That's why the market is melting. This range right here, like this, we have a range where buyers and sellers are interacting with each other, and then the buyers have become exhausted. Institutional entities step into the market and clear out all of those orders in that level, and that pushes price aggressively to the downside. And so what we are literally identifying is that final buy before the aggressive move. The third and the first candle do not meet each other. Fair value then we're waiting for price to return to that same level, and then we want to see a certain confirmation inside of that level, like this, right? Remember our market structure, a certain type of confirmation that tells us, yes, we are correct. This is an institutional level, and that has been proven with this price shift. Now we are ready to go. Let's get involved. And then we look at getting in here and getting out where? At this level right here. But there's another layer to this. There's actually an area that we need to make sure we stay clear of, or in some cases, out where? At this level right here. But there's another layer to this. There's actually an area that we need to make sure we stay.
Again. Another one. Yes, sir. Fuck off, dude. Shut the fuck up, okay? Who the fuck is this guy? Sorry, but already can tell from a mile away that that shit is not fucking real.
They clear up, or in some cases, a level that we can exploit just like smart money. And that is step number 3, which is identifying retail liquidity to avoid or to target. So very, very quickly, what is liquidity? Now, liquidity, simply put, just means money in the market. So how do we identify those? That is a stop loss. But liquidity lock, like you close a trade for, oh, we're going to teach you trade. And so when I say retail liquidity, I'm referring to, we have to identify where is everybody else getting into the market and where is everybody else getting out of the market. And how can we avoid those areas? Because smart money use that liquidity against them. Because for every buyer, there needs to be a seller. So if smart money want to take price lower, they want to sell price up, well, they need someone on the other side of the market to take the opposite side of the position. For every buyer, there needs to be a seller to support the transaction. If there's only a buyer but there's no seller, there's no transaction that will take place. So what does smart money do? Because they're smart, they understand, okay, we know all of these different types of trading strategies. So let's induce these types of trading strategies. Let's do something so that we can make it look like something's going to happen, so that we get so many people acting on that thing that's going to happen that never really happens, but because they thought it was going to happen, then money in the market, and who's on the other side accepting those orders? Smart money. Acting on that thing that's going to, these types of trading strategies. Let's do something so that we can make it look like something's going to happen, so that we get so many people acting on that thing that's going to happen that never really happens, but because they thought it was going to happen, then money in the market, and who's on the other side accepting those orders? Smart money. And that's when they move price where they really want to go to, because never really happens, but because they thought it was going to happen, then money in the market, and make it look like something's going to happen, so that we get so many. Let's induce these types of trading strategies. Let's do something so that we can make it look like something's going to happen, so that we get so many people acting on that thing that's going to happen that never really happens, but because they thought it was going to happen, then money in the market, and who's on the other side accepting those orders? Smart money. And that's when they move price where they really want to go to, because that's how they get their average prices filled. So this is a very important concept to understand, because what that tells us then is if we identify liquidity, which is usually equal highs, equal lows, support, resistance, key levels, old highs or old lows. Because think about it, in this scenario you have right here, right, price is moving down, we have these equal highs, or some people look at it as resistance. Then when price comes back up to this level, right, let's say it comes up like this, what's going to happen? The sellers are going to step into the market because they think the price is going to go lower. So sellers step into the market. Where do their stop losses go? Their stop losses probably go above these highs up in here, right? Where is their take profits? Their take profits are going to be probably somewhere at the next low. So what happens is price comes in, the sellers come into the market. If smart money wants to take price lower, what they will do is they've already, right, where is their
Fuck.
moving down, we have these equal highs, or some people look at it.
Bro, why does it look like it's about to rain? I think today's one of those days where you just have to wish for the rain, go away gently down. What the fuck? I forgot the fucking rain, go away, come again another day. Forgot the rest of it. That shit's not paying my bills. Why the fuck should I be remembering that?
Support, resistance, key levels, old highs or old lows. Because think about it, in this scenario you have right here, right, price is moving down, we have these equal highs, or some people look at it as resistance. Then when price comes back up to this level, right, let's say it comes up like this, what's going to happen? The sellers are going to step into the market because they think the price is going to go lower. So sellers step into the market. Where do their stop losses go? Their stop losses probably go above these highs up in here, right? Where is their take profits? Their take profits are going to be probably somewhere at the next low. So what happens is price comes in, the sellers come into the market. If smart money wants to take price lower, what they will do is they've already created such a supply for these sellers. So what they'll do is they'll push price into these levels, right? And then essentially what you have, all of these sellers getting triggered. And so that essentially enables smart money to get into their positions. And then once we come into the liquidity, now a lot of the time when you're hitting their stop losses, that is acting as liquidity to go to the other side of the market, right? Because there needs to be someone else on the other side to take that order. So it acts in favor of pushing price toward where smart money want to take price towards. The same with every high and every low, right? There's always, because there needs to be someone else on the other side to take that order. So it acts in favor of pushing price toward where smart money want to take price towards. It's the same with every high and every low.
So this part of the equation, right? This happens because we have this, right? Internal term low. I mean, sell side liquidity, right? Sell side liquidity. You see this SSL. Let me just draw this real quick. And we have this, right? So obviously we see an internal term high being broken over here. We see this huge rush upwards, which means it's a market structure shift. Pull back towards a unmitigated fair value gap manipulation, and we have a distribution like right after. So there's people trying to sell over here, right? Trying to sell in this area. So obviously you want to go for these highs and then take their liquidity. So let's sweep the liquidity once again. We have a manipulation, we have distribution like right after towards these lows. Pretty fucking simple. But you also want to consider the lower resistance and also consider lower resistance to query runs and higher resistance to query runs. Simple as that. Okay. So once you understand the concept of liquidity runs, it's pretty simple.
Right, there's always areas of liquidity. There's always liquidity that people look at trying to sell or buy from. We need to identify that and understand that so many times these levels get purposely manipulated just before going to the other side. If you ever traded something like an equal highs or equal low strategy before, or maybe you do right now, do you not find it very weird how a lot of the times price will come back to your equal highs just to wick through it and then continue melting in the direction that you wanted it to go to? That's not an accident. It's purposeful market manipulation. Weird how a lot of the times price will come back to your equal highs just before going to the other side. If you ever traded something like an equal highs or equal low strategy before, or maybe you do right now, do you not find it very weird how a lot of the times price get purposely manipulated just before going to the other side? If you ever traded something like an equal highs or equal low strategy before, or maybe you do right now, do you not find it very weird how a lot of these levels get purposely manipulated just before going to the other side? If you ever traded something like an equal highs or equal low strategy before, or maybe you do right now, do you not find it very weird how a lot of the times price will come back to your equal highs just to wick through it and then continue melting in the direction that you wanted it to go to? That's not an accident. It's purposeful market manipulation for the clear and obvious reason I've already explained to you previously. But there's also one other type of liquidity, a type of liquidity that most people never use. In fact, most people never even think about using, and that is time-based liquidity. Yes, think about it for a second.
Sessions.
What is the most common thing amongst all traders? The time that they trade. Most traders in America want to trade the American Open. Most traders in Europe, in England, they want to trade the London Open. So we have New York Open and we have London Open. Now, what's interesting is that if you think about it logically, right? Let's say right now in this grey box right here, this is just price. And the moment that we break out of this grey box, London session has started or New York session has started. Now, imagine just for a second, New York session just starts or London session just starts. And then you see this, a big aggressive move in one direction. What do you think it does? Every trader, or a lot of traders at least, I look at this and they're like, oh my God, price is flying. I need to get involved in buys. My buys today is buys. I'm looking to buy the market today. Or FOMO crap. Price is going. I need to get involved in the market. Price is going. Hello, what are they doing? They're buying. Okay, I'm going to wait for price to come back, right? Some people are doing the retest. Okay, I'm going to put buy stops here, buy stops here, buy stops here. Okay, my stop loss is going to go below our low or below these lows, right? Again, another thing that you oftentimes have is what do we have here? We have relatively equal highs as well. So it's combined time and liquidity. We have relatively equal highs, and then those highs have just been broken. And so what do you think everyone's looking at now? Oh my God, New York session just started, just broke a major high. Buy. And then they're going to try and get involved in the retest. Okay, break and retest, go, right? So predictable. And so what I do is I combine all three of these steps in a very systematical manner by understanding where is the market going to go because I know the direction of the market, where is the areas of interest that smart money have shown that they are involved in, and how do I identify retail liquidity so I understand where the manipulation is happening so I'm not a part of that manipulation, and or I can target that manipulation because I know price is going to go there. I know where their stop losses are. I know the price is going to go to the stop losses, so better to take price into the stop losses with them. Trading the zero-sum game, there has to be losers for everywhere. That's just how the game goes. So I'm combining those three things, and so it looks something along the lines of this, right? Let's say, for example, price was like this, and price was bearish, right? So step number one, we are bearish, right? We have low, we have high, we have lower low. Right, step number one, we are bearish. That is my bias. I'm looking to go short, only short. I don't care about long and I don't care about impulse to move upwards because I understand, right, which a lot of people for some reason don't, but I understand that every time price puts in a new low, it has to come back, puts in a new low, it has to come back. So if I know that it has to come back, I don't need to get involved in the buys. I'll wait for price to come where it needs to go and then continue trading lower. So step number one is bias. Okay, we're bearish.
That's true. I agree with him. Bye. Yep.
Bias in this example.
Bro, it's like fucking. It's like 6:30 almost. In 10 minutes it's gonna be 6:30 in the morning. That's fucking fun. Like I don't know. It's fun for me.
Step number two, identify a key area.
My life's sad, low key. So you can see the speed area. It's tapping into speed area. It's always rebalancing at PD area or just swinging. That's all.
Interest. So let's say, for example, there was just a little period of time where we had a little bit of a range in here, and then we had the move, right? Just before this. Well, that shows me that smart money had just stepped in and got involved here. There was just a little period of time where we had a number to come back, was in a new low. It has to come back. So if I know that it has to come back, I don't need to get involved in the buys. I'll wait for price to come where it needs to go and then continue trading lower. So step number one is bias. Okay, we're bearish bias in this example. Step number, I don't need to get involved in the buys. I'll wait for price to come where it stands. Every time price puts in a new low, it has to come back. Puts in a new low, it has to come back. So if I know that it has to come back, I don't need to get involved in the buys. I'll wait for price to come where it needs to go and then continue trading lower. So step number one is bias. Okay, we're bearish bias in this example. Step number two, identify a key area of interest. So let's say, for example, there was just a little period of time where we had a little bit of a range in here, and then we had the move, right? Just before this. Well, that shows me that smart money had just stepped in and got involved here. So let's say I have an area of interest, right? An area of potential interest. But I want to combine that with liquidity. So I know that just before my area of interest, I have the liquidity up here, the liquidity down here. I know that London session is about to just start right now, or New York session is about to just start right now. So therefore, I have key level, right? Key high, Asia high, or London high as liquidity. And so I want to see, okay, I'm bearish. I'm only looking for shorts. I have a point of interest. Perfect. I have liquidity. Perfect. I want to see before even
Up close candles before the downward move. Yep. Got it.
happens. I want to see a manipulation of everyone's liquidity.
Perfect. PD area manipulation. In this case, it's not fucking fair early gap.
And then I want to see mitigation of a point of interest. And then I want to see confirmation, a market structure shift that tells me, yes, you are correct. I don't want to guess and gamble on every area. I want the confirmation. I want price to show me that I'm correct. And then I will answer. It's like being in a casino where you're playing a game of poker, where you get to see your opponent's hand before you even have to bet any money. You're not going to lose in the long run. So we pull back, we get here, and I just want to take and continue riding the wave of the overall trend. And that, ladies and gentlemen, is the exact model that I trade. And to prove that to you, I'm going to now walk you through a step-by-step example in the live markets, showing you an exact trade that I broke down, right, for my members. It's an exact trade I took, I'll upload the screenshot right here. Before my session with my members on Wednesday, the 7th of August, I showed them this, which is exactly what you're looking at right now. And then we seen exactly what I was looking for happen. Then you see me entering the trade, and then you see the result of that trade. And that's the exact trade that I'm going to show you today to showcase what it is that I'm talking about and separate myself from all these other guys that will just waffle but not show anything. Right? Let's get into the details. But just before we dive into that, if you've taken any value at all from this video, I would massively appreciate it. Subscribe to the channel if you love the content, and like the video, hit the bell notification if you want to be notified every time when I upload. It does mean a massive service. It helps me grow this channel, and I appreciate every single one. Let's dive into this trade breakdown. Okay, so very simple. You've already seen the screenshot. I'll put it one more time just here of what I was looking for with my members. Now let me explain why I was looking for that. So here we are, GBP USD on Wednesday the 7th of August, right? You can see if we look at price in here. So this is the price action. Now, if you remember carefully, I'm always in the 15-minute time frame. When I'm trading intraday, right, my scalping strategy,
All this trendline liquidity right here. You get the point, okay? So pretty much, I'm expecting a manipulation right after them high to be broken. Pullback and entry back towards this drawn liquidity. Pretty fucking simple. You're basically flipping the script over and over and over again, because at this point you have all these lows which are taken out, so you have a pretty good bullish bias right after. So you can be on the market, right side of the market twice, not once. So that's what, 2 trades, not 1. And you just made the money, man.
intraday strategy, I'm always looking at the 15-minute time frame. So step number 1 is identify my directional bias. Remember, I always want to know where am I trading, higher or lower. So if you just zoom out like this,
All the block retest over
right now, you can very clearly see that price, we had a low, we had a high, and then we broke the low that was in control, give us a break of structure to the downside, like that, and then this is the current low, and currently we are sitting between the old swing high up here and the current low down here. That is our trading range. Therefore, I only want to go short, right? I'm not interested in longing. I'm interested only in shorting. I'm interested only in taking out this low down here, because I know that that's the next target for price. It just needs to have somewhat of a pullback, right, before trading into that level, and I will sit patiently and wait for price to come into all of the other steps and show me that it's ready to do that. So step number 1 is obviously my directional bias. I know that we're bearish. Great. So I have swing high, I have swing low. Perfect. I know I'm bearish. I'm only looking for shorts. Step number 2 is to identify an area of interest. And so what I want to do is I want to look at this price leg, right, where all the aggressive moves came out of, and I want to identify exactly what it is I showed you. Right? I want to identify areas where we have a little bit of a range and then aggression. A little bit of a range and then aggression. That is what I want to identify. So if we look at where we've come from, let's actually dive into that. You can see that we had price pushes down, a little bit of a range, a little bit of aggression, a little bit of a range, aggression. Perfect. So there I know that there was a...
Yo, what's up, bro? SD0, what's up, man? I'm Zero from Discord. What's good? Yo, it's like fucking 6 a.m., bro. It's like 6:30 in the morning for me right now. I'm glad you joined, though. I'm gonna go sleep in a while. I don't know if you can see this, but I'm literally doing this like low-key for the fun of it as well. You know, I'm actually like right now. Oops, my bad. If you can see that, it's like bright outside. It's like literally like, oh my god, my frame rate's so fucking good when I'm like zooming into something. That's just want to say hi, but you're up late. Yeah, it's like I didn't sleep at all, so I'm not up early. I'm not up early. I just didn't sleep, so pretty much I'm just waiting until the sun hits me and then just end the stream there, because I want to give you guys like low-key like you're basically 12 hours ahead of me. Yep, that's right. It's 6:30 in the morning, 2nd of September 2024, and that's kind of weird because in I think 17 days it's my birthday. So yeah, it's pretty, I don't know, it's weird. But right now it's like I've been streaming for like an hour almost, yeah, like an hour, and it's like I'm waiting for the sun to come up, and then right after the sun comes up I'll probably like end the stream here and then, you know, just get back. I mean, probably go to sleep honestly right after when you get back. Anyways, let's lock in. Happy thanks, man, I appreciate it. I'm gonna be 19 years old this month. Yep, on the 19th I'll be 19 years old, so yeah, 17 more days. Not excited for it, but it is what it is. It's like a weird milestone. It's kind of weird because like it's the only time you're turning 19 years old. Have you entered a trade today at all? Yes, I have put a... This is a bit of a risky trade, low-key, but this inverse very good because today is a bank holiday, so you'll be 19. Yo, for real? So you have a few more months until like... So one of my friends are also like the same month. I don't know if you know this guy, TZ. He's basically like right here. TZ. He's also from yeah, basically born in December. So you can see like over here, this is a bank holiday. So obviously I'm not trading you know, normal NASDAQ, but I am in fact trying to take a trade here though. You can see that this is a overall view of this market structure, because overall, honestly, like for as long as you view all these, like I literally made like a stream a few hours back. Basically, it's like when the low resistance liquidity run. So for example, like a low resistance liquidity run is basically when a manipulation is not taken out. For example, like if the next high is over here, right? Obviously this high is not taken out, right? So this needs to be induced, right? So I mean swept in other words. So basically, until this high is taken out, right? I won't be bearish. You know why? Because I'm expecting a pretty fast reaction towards here. As soon as it takes out any of these lows. So I'm not trying to like be on the wrong side of the market, because for as long as this high is not taken out, right, that means you are about to get liquidated, because the sweep is incoming. So a liquidity sweep is going to happen over here, and I'm expecting an internal term low somewhere here to be broken like this. So let's say there's an internal term low over here. You see this, which is lower than the internal term low, and then you see this pullback somewhere here, maybe like a order block, a fair value gap, whatever you want, and then go towards the low. So you can basically entry off, like considering order flow, you can like go towards, like let's say this is on the 15 minute and your entry is on 1 minute. You can entry off this, targeting this as your stop loss. I mean, take profit, and then, you know, obviously, let's say your 1 minute fair value gap is somewhere here, you can target this as your stop loss. And if the TP is heading towards like, I mean, honestly, yeah, this should be fine, because basically you're targeting this as your stop loss, maybe a little above that. Boom, you have a good trade down towards this point. So honestly, if you get a 6.7, right, even if you're confident, just do like a partial. Like if it's 6.7, what's like half 6.7? 3.35. So it's like, just take it down to like 3.4, somewhere here. So then you should be fine. And plus, like, yeah, I would say risk like 1% of your account. Right now my account's kind of down, so it is what it is. Because this is like my first account, so I don't want to buy a new one and, you know, just try to pass it quick. So it is what it is. Let's see. But yeah.
Range and aggression.
Okay, final video before I probably hit sleep until it's, you know.
The issue is this area has already been mitigated. Prices already come back to this level.
Yeah, one more thing, right? So he mentions that in this video. So for example, like over here, these candles, these are the only candles that are pointing towards the upside before the drastic downwards move, which means this is a potential point of interest, because this whole area is some area that could be like retested, like these 3 candles before the downward move, right? So yeah, this is a potential area of interest, because this is a I would really expect like a pullback towards this area. So
we move on. Okay, we push down, have a little bit of a range, a little bit of aggression, and then we have another range and aggression. Okay, great. Look,
exactly.
Right here we have a range, right, where we're sitting sideways price action, and then aggressive momentum that comes down into the price.
Yep.
So we're gonna mark out that range like that, and then if you look where the aggression comes in, where is that?
This has been mitigated. So if something is wicked into, you don't want to be like using it anymore, because you can see this has been wicked into right here. So this is completely invalidated. You want to like disregard it completely. But this could be an order block if you think about it. See, right here, this candle. You can use this as an order block.
It's this final.
But yes, you can also consider this up close candles before the downwards move. So because of the drastic selling pressure right after. So this is a point of interest where price needs to rebalance. Similar to how a fair value gap works. So
candle, and then this next candle, and then this third candle. So if we go to the low of the first candle and the high of the third candle, is there a gap between them? Yes, there is. That is a fair value gap. That tells me then that I know this is an area that price will come back to. So this right here, this area where price is, right?
Fair value gap manipulation, right here. And then this was a bit of a inducement type of trick, and then it goes lower. So if you see, also one more thing, right? If you see something like, let's say after the manipulation, let's say like on a 4 hour, right? But hope the trade goes well for you. I'm gonna have to go though, barbecue. Alright, that's no problem, man. Yeah, for sure though. Yep. Take care, man. I'm gonna go sleep in the well. So yeah. Have a nice dinner, I guess. I don't know, that's such a weird NPC compliment to make, but send me some trade ideas. Wait, what was that? Send me some trade ideas and such when you get the chance. For sure, yeah. You can like, I mean, I stream pretty regularly, so you can like literally take like the, you know what I'm saying? Like, don't take the same trade as me. Send me the video later. Okay, for sure. I'll send it. This guy's pretty good. Like, I like watching this guy and Casper SMC and TJR sometimes. TJR's a bit odd, but you get the
This
point.
level here is the level
It's
that
fine. Anyways, thanks so much for coming by, man. It's like almost it's like about to rain today. Let's see.
interesting. This is the range and initiation.
Oh.
Cool. That's the level. So I want to map that area out, and I want that to be my point of interest. I want price to react
Yep.
from this level, and I'm not just gonna blindly take
See?
my trade from that level. I don't just want to put my entry here, my stop loss here, and my take profit here, because that only gives me a risk to reward ratio of 2.87. Meaning if I risk $1,000 on the trade, I'll only make $2,870 back from that. That's not what I'm here for, right? I need a bigger risk to reward to make it worth it. So what I like to do is I like to confirm my levels. This gives me higher probability of being correct. It tells me, yes, you're correct. It shows me I'm at the poker table. I see my opponent's hand. Then I can act. Then I can bet chips. So what am I looking for? As you've already seen, which I outlined, and I'll show you one more time, I'm looking for price to come into this level. Okay, step number 3, identify liquidity. Where is everybody else? Everyone else is looking at the same picture as me, right? So I need to take a step out, and instead of trying to look at what the market's doing, look at what everybody else in the market is doing. That's going to help me understand where everybody else's mind is at. So what I want to do is I want to go, okay, in this blue box right here, guys, is Asia session range. And this green box right here is London session range. A lot of times, London will sweep Asia. In this specific day, it did not. It stayed inside of Asia. So what do we have?
Right. Interesting.
We have trendline liquidity going down in here, right? So I know that there's...
Yeah, so obviously this, right, like I said, right, this is a low resistance liquidity round because this high has not been taken out by these highs, right? Which means eventually this needs to be taken out, right? And then eventually, right, because we're drawing bullish, we need to take this out first. And then it's going to react from this PD array and then manipulate through this PD array and the distribution leg all the way down here, because all this is unswept liquidity. I mean, this has not been swept properly with these lows over here, these swing lows, which means I'm expecting a price manipulation at this low, at this swing low, this very swing low, assuming that price has been swept with the previous swing lows. But yes, this is the closest draw, so I'm expecting this PD array to inverse this and take it all the way down here.
Some traders who are looking at that as though that is bearish, so maybe they want to sell the third touch in here, and maybe they want to put their stop losses above this old high. Okay, so we have liquidity. We also have, relatively equal highs across here. Again, could be a different sign, a different type of trader looking at that and saying, you know what, price come up, trade it away, come back up, respected this area, and then continue trading lower. So they probably have areas of interest here where they're trying to sell in here. Where do their stop losses go? Their stop losses are going to go above these areas in here, or worst case scenario, above these in here if they're protecting them. Okay, cool. That's that side of the market. What else do we have? Well, we have trendline liquidity building on the downside. So there are traders look at this and go, okay, one touch, two touch, okay, third touch, maybe I'm looking at buying from this level. So they're buying at these areas. Now, where are their stop losses? Their stop losses are likely under the lows in here, the lows down here, or the lows down here. Okay, great. What else do we have? We have equal lows right here, right? Again, just move that for a second. We have equal lows right here on these two candles, right? What do we see? We have one bounce and then an aggressive reaction back out. So maybe again, there's other traders looking at getting involved in the market in these levels. Now, if there was buyers in here, where would they put their stop losses? They're going to put them below this low or below the old low in here, right? So you can see my framework of thinking. I'm not trying to identify what's the most important thing I want to do. I just want to make sure that I'm not getting involved in any of these traps, right? Because all of these different levels here are traps. There's no two ways about it because we need that liquidity. So I already know, number one, smart money are going to take price lower because that is the structure. Smart money has that much money, it can't hide its footprint. It's always leaving clues. So if the market structure is bearish, that is because they are taking the price lower. They expect the price to go lower. Great. I identified area of interest where price could potentially reverse from. Great. I've identified all the liquidity and most importantly, time-based liquidity, because what's going to happen in just a moment, guys, is New York session is getting ready to open, right? 6:30 a.m. New York. So New York session is getting ready to go. So now I'm framing my hypothesis. I'm framing my game plan. And here's what I'm looking for. I know that I only want to go short. And I also know that I need to avoid all of this liquidity. I know that I have a point of interest in here. So this is the plan I build in my head. I think to myself, okay, cool. I need to see all of this liquidity run. All of these sell stops are going to act as buy orders for smart money to take the opposite side of the market. New York session is open at the exact same time. And so if we get a breach on all those stop losses, everybody inside a New York session is going to be opening with the market open of prices.
There's so many more orders over here. So much inducement. I mean, liquidity to enter the market. So.
Aggressively trading higher, they're going to FOMO into that market, or they're just going to have a long bias because the price is trending higher. Great. So now I know that when New York opens, there's going to be a lot of buyers as well, which is smart money going to be able to absorb with their positions. Okay, great. More buyers, right? Unfortunately, in this market, 95% of people lose money. So you just need to understand what most people are doing and do the opposite, right? Because Warren Buffett says, literally do the opposite of what everyone else. And that's the game we're playing. So all these New York traders are going to get involved in here, and they are going to buy, and then we're going to use that liquidity. And then price is going to maybe come into this area, but I'm only going to get interested in this area if I drop to a lower time frame and I see this pattern. I see a push up, pull back, push up, shift. That tells me that there are sellers at this level. So now I can position myself with those sellers.
Interest low broken over here.
Right? And what's a lot of other traders doing? A lot of other traders that are breaking this high right here, they're going to try and buy again in here, right? Break and retest. So there's going to be more buyers in here, enabling what? Smart money. Push back, push up, shift. That tells me that there are sellers at this level. So now I can position myself with those sellers, right? And what's a lot of other traders doing? A lot of other traders that are breaking this high right here, they're going to try and buy again in here, right? Break and retest. So there's going to be more buyers in here, enabling what? Smart money again to get involved in the market. So all of these buyers in here, where are they going to put their stop losses? Probably below this low, maybe below these lows. So that essentially enables me to understand that all of these guys are also liquidity, because what happens is if price comes down to these levels in here, well, what happens? In fact, it's a domino effect, right? If price comes into the first liquidity pocket, all of these stop losses of these buy positions get executed as sells. So price sells lower into more liquidity, which pushes price further into more liquidity, which pushes price further, which pushes price perfectly into my take profit level. My take profit is just going to be at these lows down here, because after that I don't know what's going to happen. There's no more liquidity and there's no more footprint just yet for smart money. Once that's happened, the trade idea is complete. And that's exactly these lows down here, because after that I don't know what's going to happen. There's no more.
Sorry, my bad.
More liquidity and there's no more footprint just yet for smart money. Once that's happened, the trade idea is complete. And that's exactly what I was waiting for. And that's exactly what you can see in the screenshot that I shared with you, that I give to my inner circle members right before that trading session happened. Which reminds me, if you guys are looking to become a consistently profitable trader, get funded and make up to $10,000 a month from trading consistently, and you want to work with me in a private mentorship, then below this video is a link that will allow you to apply to work with me. Fill in the form, apply to see if you're a right fit to work with me. And if you are, I'll work with you and help you become a consistently profitable trader, get funded, and start making a full-time living from trading. But let's break the trade down. So essentially, we're just looking for the manipulation of these levels into this high. So I'm literally looking for exactly what you see on the screenshot, which I'm going to share with you right now once more. I'm looking for this. So let's play price and see what actually happens. Close this.
EDRA manipulation, obviously. EDRA manipulation. Low time frame, 1 minute entry.
So we begin breaching into these highs, but what else do we do? At the exact same time, now we create more equal highs. So there's more liquidity above these highs. And once price has breached all of this liquidity, and think about it right now, right? Now everybody's gearing up for New York session. So everybody's looking at this from New York and they're thinking, oh my God, price is exploding. I want to get involved on this move and take price higher. So they're buys, right? They're putting their buy
A lot of liquidity to induce, yeah.
And so smart money's able to use the other side of the market. And then essentially they're putting their stop losses below these lows. Or you have the retest guys, which are, okay, price is rocketing. Okay, when price comes back down to here or here or here, I'm going to look at longing again. And so buys come in here again. So for me, when price comes into this area, again, like I said, I'm not just entering from this area. I want to now drop down to the 1 minute time frame. Yes, the 1 minute time frame. And I want to do the same thing that I always do. I want to look at the market structure. You can very clearly see that at this moment in time, the market structure is bullish. So all I want to see is a change. I want to see, because right now I don't want to sell. So I don't want to go short if price is trending in the upward direction. I want to see, just like again, the poker. I always reference this. I want to see the market show me that it's now going down so that I can get involved in that, because that's my confirmation. And because I dropped to the lower time frame, because I dropped to the 1 minute time frame, my stop loss is going to be so much smaller that I'll have a much larger risk to reward ratio, which will make me more money. So that's why I'm waiting for. I'm waiting for a break of, that's my confirmation. And because I dropped to the lower time frame, because I dropped to the 1 minute time frame, my stop loss is going to be so much smaller that I'll have a much larger risk to reward ratio, which will make me more money. So that's what I'm waiting for. I'm waiting for a break of this low. And my scenario is either scenario A, we have something like this, and then I short, or scenario B is I have something like this, and then I want to see this, and then I can short. Either way, I'm waiting for price to go bearish. So we're waiting. Okay, price is currently in range. Now notice what's actually going on right here, right? With price ranging like this. Again, price is ranging like this, which means that right now there are lots of orders taking place at this same price level, which means there's a battle right now between buyers and sellers. A very obvious battle, because it's New York open, so there's a lot of volatility, but price is staying in the same range, which means at this key level, after we've taken all this liquidity coming out of this area, there's loads of people that are like, I want to buy the market into this level, and smart money are absorbing all those orders in this process. That's why price is staying at this level and continues to stay at this level for an extended period of time until you get finally the buyers, right? The buy orders in here get exhausted. There's no more orders waiting to be filled from buyers at this level, right? There's only sellers that take over the market. And when I see that, I see those sellers take control of the market. Remember what we're looking for? We're looking for a range and then the aggressive move to the downside. And then I always want to look at taking pretty much the entire range if I can, right? If it makes sense from a risk reward perspective, the entire range of price like this, because this is where the orders are transacted, and then there's the aggression, and then we can come back in here to make the rest of the orders, and it'll be met with bearing in mind, we have to understand from this level right now is that there are so many people or orders in this level that have just been, transacted at sells, right? And there's so many sell orders in this level. You can see it very clearly. Like buyers and sellers are aggressively reacting. Sellers have come out on top. They have won, and we have shifted bearish. So it's told me that we're going lower. So now, if price comes back into here, what's going to happen? All of these sell orders are going to be protected, right? The people who are short in the market in here have a vested interest in protecting their position. If that means that they have to deploy more capital so that they don't lose money, that is what they will do, especially large players, right? So I just want to understand that concept, and I want to put my short in here. I want to put my stop loss at the highs up in here, right? 6 pip stop loss. And where do I want to target? Well, if you remember, I'm just expecting the trend to continue, right? So if I go back to the 15 minute, I just want to see all of the liquidity that now sits at the lows down here, right? All of the lows down here is now full of liquidity. All the buyers have been taken out of the market. All of the sellers, sorry, have been taken out of the market, right? And now all we have left is all the liquidity down here. So what's going to happen is when this liquidity gets filled, it's going to act as sell orders, because that's how they get out of their positions, which is going to make price go more aggressively to the downside, right? So that is ultimately what I want to look at. I want to look at taking this low out in here. I do have a rule, and I'm going to share it with you, that I take off 50% of my positions at 1 to 5 risk reward. So if I'm risking $1,000 on this trade, and I was risking more, then I would have made $5,000, right? And if it run to the full day profit, $1,000 would make me $8,270. And if I close 50% here, then I'll make half. So 2,500, and then if I close 50% here, I'm going to do 4.15, right? So $4,150. Giving me a combination of around about $6,500-ish, near about, if I was to risk $1,000 per trade, and I risk more than $1,000 per trade. So let's see how price plays out in this scenario, right? Let's close this a little bit. It's a little bit big, and I like things always organized and clean. And let's just see how price plays out to this level. So price goes a little bit lower, no problem, right? Creates equal highs internally, right? Relatively equal highs at least internally. Great, no problem. Perfect opportunity to get swept, right? And then price tags into our area. Now notice that we're now back in an area that's heavily protected. So there's a pretty high probability that this area of price could stay intact and could be respected. And then we begin to get our reaction out of that level. So I'm going to speed things up now and go to the 5-minute time frame. So I don't want you to sit here and just watch everything, right? Notice that what we have in here is, if we go back to the lower time frame again, is in here, there is still a level of range, aggressive move, first candle, third candle, don't meet, fair value gap. So there's still a potential for price to come back into this level. That is why I haven't gone to break even yet, right? That's exactly why I explained why I didn't go to break even when I give this to the members, or when we walked through this with the members as well, because price comes back into that exact area and then begins to continue moving lower, at which point then I can go to break even, and let me show you why. You can already see right here, right? Yes, we still have the range, we still have the aggressive move, but look, this is the area where price is going to probably respect if that area gets respected, right? This final level, right? The first candle, second candle, third candle here, and my break even is above that, so it's fine. I can move my stop loss to break even at this point and take my risk off the table. And yeah, pretty much that is the position, and I'll kind of let this position play out because it played into the next day, and it's fine. I can move my stop loss to probably respect if that area gets respected, right? This final level, right? The first candle, second candle, third candle here, and my break even is above that, so it's fine. I can move my stop loss to break even at this point and take my risk off the table. And yeah, pretty much that is right. The first, we still have the range, we step back into that exact area and then begins to continue explain why I didn't break even when I give this to the members, or when we walk through this with the members as well, because price comes back into that exact area and then begins to continue moving lower, at which point then I can go to break even. Let me show you why. You can already see right here, right? Yes, we still have the range, we still have the aggressive move, but look, this is the area where price is going to probably respect if that area gets respected, right? This final level, right? The first candle, second candle, third candle here, and my break even.
Yep, that's right.
This is the area where price is going to probably respect if that area gets respected, right? This final level, right? The first candle, second candle, third candle here, and my break even is above that, so it's fine. I can move my stop loss to break even at this point and take my risk off the table. And yeah, pretty much that is the position. And I'll kind of let this position play out because it played into the next day, and I did catch another trade the next day, which is also something I obviously forecasted beforehand and broke down members, but I'll leave that one for now. And this is enough information. I don't want to overload you. But yeah, pretty much then heading into the next day, there's the Asia session. And again, if you guys remember my strategy, you'll be able to see this trade and why I took it, right? There's the Asia session, right? And then London session is opening right now. What do you think the London people are looking for? You think they're probably looking for buyers, right? And so where's the liquidity? The liquidity exists where at the lows of the market, you can already see that price does what we need to do, pushes up, pulls back, shifts, I get in here and I ride all of this to down here, and that also gives me a 1 to 5 reward, which you've probably seen inside the screenshot. Hope you guys enjoyed the video. I'll see you in the next one. Don't forget to like, subscribe, and check the link down below if you want to work with me. Catch you guys soon. Bye bye.
Fuck is this guy? So I saw the side of his fucking eye just like staring at me. So I was like, what the fuck? Anyways, let's get back. What's going on? Okay, I'm not watching that. It's a 1 hour long, 1 hour long video. Okay. I want to learn more of like structure rather than just like motivational videos.
Next, it's where are the logical areas that I can long from? So I'm looking for unmitigated areas of demand. What do I have? There's only one area in this level that's unmitigated, right? It's this level in here. This is the only level, and if you actually refine to this candle, we have the fair value gap. This is the only level that is unmitigated. And so that's the only point of interest that we can look at trading from. What about liquidity? Well, we need to see sell-side liquidity.
Oh my god, I'm getting a fucking back pain, bro. This shit is like, I don't know how to explain it. It's like a fucking weird back pain because I've literally been sitting here for like a while now. So it is a pretty gloomy day to say the least. I think it's like 7 in the morning, almost 6:50. But it is pretty fucking gloomy out here. It is pretty fucking gloomy, so I don't know.
Liquidity and buy side liquidity. So the first thing that I see, which is very obvious, is this massive trend line across these highs, right? This massive trend line across these highs, which is very obvious. So I know that there's a lot of traders that are looking at sells in these levels. So a lot of the side of the market, of the dumb money side, are selling, which is perfect because we want them to be selling. Because if they're selling, it's likely because smart money has set the trap so that they sell, so that we can buy into those sell positions. So that's good.
Block manipulation, basically any sort of PD area manipulation. This is already mitigated, so fuck that. All the block manipulation goes towards this
news. We expect our high to be taken out because we have a
yeah, we do have this as well, which is a failure swing. So
for context, now we need some internal structure on the sell side. And what do we have again? We have more trend line liquidity, right? One touch out, second touch out, third touch out. Potentially long traders looking to long in here. Stop losses, potentially in these regions. In here for long traders, profit levels up in these regions.
Once it breaks an internal high, obviously pull back entry. So we could entry off a 1 minute pull back entry.
In here, we also have not only are these a trend line level, these are
1 minute.
also relatively equal lows, right? Old relatively equal lows. But the most important one for me is this is Asia session low. So those of you who have been around the channel for a long time know how much I love the Asia session low as a pocket of liquidity. So with that being said, I have all of my sell side liquidity set up. And so all I'm expecting is a manipulation, initiation, right? So the manipulation phase is step 1, right? Manipulate into the sell side liquidity. Initiation is step 2. Now I wait for a very large volume to come in for the buy side to confirm 2 things. Number 1, to confirm my area is correct. Number 2, to confirm that smart money are actively involved. Once I get the manipulation, the initiation, then I can just wait and get involved on the mitigation, and then I will ride the continuation. That is my model. It's the same thing over and over and over again. Let's see how that looks in real time. So 15-minute time frame, London session opens, and you can see that London session manipulates into my point of interest, and we take out all of the lows across here. So what happens at this point is I want to drop down to my lower time frame to wait for my momentum to kick into the market that will give me a change of character, that will tell me on a lower time frame that price is now shifted bullish. That's a 5-minute time frame. And now, really and truly, I'm just waiting for the internal high, right? If we look at things, we have low, price pulls back, high, and then low again. Wait for that high to be displaced, and once this high has been taken out, I'll look at getting involved in the area that manipulated when price pulls back, and then ride the wave up. And it's that simple. So we play price out, and then you can see what we have. We have the manipulation of all of the sell side liquidity. We have the initiation of smart money. Now I will get involved on
the
mitigation. So
it's like bright outside right now. It's a gloomy state up.
The manipulate the wave placed, and then once this high has been taken out, I'll look at getting involved. Low price.
Got a fucking weird neck pain. Like,
but that's a 5-minute time frame. The market that will give me a change of character that will tell me on a lower time frame that price is now shifted bullish. That's a 5-minute time frame. And now, really and truly, I'm just waiting for the internal high, right? If we look at things, we have low, price pulls back, high, and then low again. Wait for that high to be displaced, and then once this high has been taken out, I'll look at getting involved in the area that manipulated when price pulls back, and then ride the wave up. And it's that simple. So we play price out, and then you can see what we have. We have the manipulation of all of the sell side liquidity. We have the initiation of smart money. Now I want to get involved on the mitigation. So typically, smart money would have had to use their liquidity to sell into this level to create the liquidity so that it could get its buy orders at a better average. So when the price comes back, they're able to close out any remaining sell orders that they had to use, any sell liquidity they had to use to create this scenario. So they will bring price back to be able to close relevant sell positions at minor losses or break even. That's when I'll get in, and then I'll look again out at this swing high up in here, right? This old high, this target, this Asia high, this old high. That is our structural context and our liquidity context together. So place a long position at this area of demand, right, that has its fair value gap, give a 4.5 pip stop loss, and we just want to go from minimum 1 to 5 restriction. When the price comes back, they're their liquidity to sell into this level to create the liquidity so that it could get its buy orders at a better average. So when the price comes back, they're able to close out any remaining sell orders that they had to use, any sell liquidity that they had to use to create this scenario. So they will, bring price back to be able to close relevant sell positions at minor losses or break even. That's when I'll get in, and then I will look at getting out at this swing high up in here, right? This old high, this target, this Asia high, this old high. That is our structural context and our liquidity context together. So I'll place a long position at this area of demand, right, that has its fair value gap, give a 4.5 pip stop loss, and we just want to go for a minimum 1 to 5 risk reward, right, which is near about our swing high. And that is pretty much just what we're waiting for. So we'll play price out, see how price delivers on that. So you can see the price has tagged into this position and is now giving us the reaction out of this level, right? We can see we've tagged in, smart money, mitigation, and now we're playing the continuation in the direction of our overall bias. So you can see prices having these little internal swings, trading prices higher. And there you can see price manipulates into the take profit 1 to 5 risk to reward. And just to recap, little 30-second recap on the overall understanding.
Because it was a unmitigated area right here. So ideally, unless it's unmitigated at this point, like if it's not mitigated, I wouldn't expect to like fucking take this any step further, because I want to fucking use this fair value gap distribution like right after market structure shift confirmation with the fair value gap inverse fair value gap down towards the fucking drawn liquidity. Simple as fuck right here. You can see that this has not been manipulated. These lows have not been manipulated, right? And you can see that this has not been swept. So I'm expecting price overall to come here, rebalance and go higher. Simple as fuck.
Number one, step one, bias, context, right? We need to understand, is the market likely to trade higher? It's bullish. Our internal is also bullish. And so from an internal perspective and an intraday perspective, our London session should be bullish because we're expecting higher prices. We've already done everything that we need to do to get high prices. Then comes liquidity and supply and demand, right? Those are secondary to market structure. We wait for our internal manipulation. We wait for our initiation, which tells us we've manipulated sellers. We are now confirmed long, and we want to get involved in the mitigation process and get out on the continuation process. That summarizes the edge. If you want more of these strategies, more content just like this one, link down below has an entire free course, no strings attached. Enjoy. Here, or my stop loss here. So again, in just this one short, brief piece of price action, you can
Probably the last video that I'm gonna watch, to be honest.
super high value free content that's better than most people's paid stuff. To J support, like this video and subscribe to the channel. Let's go in. Okay, so what we're looking at for step number one is directional bias. It's very simple. We want to know where is the market heading, and the way we do that is obviously through market structure. So here we are showing a theoretical framework of market structure. What you want to do is you just want to take the most recent low and the most recent high. This right here is going to give you a framework of understanding, right? Your trading range. This is where prices range between low and high. So let's say hypothetically at this point in time you don't know whether we're bullish or bearish, right? So what you wait for is you have your high, you have a low. What you can do is you can take the high, and the low, you can draw a box across like this, and you can wait for a breakout of your trading range. Everything inside of this grey box until we break out is all internal, right? So we have our external low, our external high, and then you can see we break out to the upside. So then it's very clear to us that we have had a break of structure to the upside, which means we are bullish. And it's very, very simple. If we are bullish, we are looking to long. So now we have low, high, high, low, high, high, and we're bullish. So it's very, very simple. We're looking to long the market. And that is ultimately how we establish our directional bias. We know where the market's heading by identifying these external swing points of market structure. And if they're making a series of high highs and high lows, then the price is going to trade higher. And therefore, we want to look at longing. So that's step number one, is we need to identify, are we looking to long or are we looking to short? Let's get into step number two. Step number two will be identifying areas of liquidity inside your trading range. Now, bear with me just a moment. It's actually very, very simple. You see, we've just gone over market structure and we've established that we are bullish, right? So we're bullish, we're looking for longs. Here is our protected swing low, because this right here is the low that broke the previous high and put in this high right here. So we have this right here as our protected swing low, and we have this right here as our weak high. So in a nutshell, we already know we want a long. We want a long above this low, and we want to sell that long back above this weak high. So we have our directional bias. Now what we need to do is we need to identify all the key areas of liquidity that sit inside of the trading range that we must avoid at all costs, because if you don't spot the liquidity, you will be the liquidity. And so the most common form of liquidity is ultimately going to be forms of equal lows, equal highs, Asia session high, Asia session low, or old highs and old lows. That is pretty much it. So anywhere that there is likely to be somebody's stop loss, right? So if we look at this right here, this is the exact example scenario that we're going to go with. Here in blue, we have the Asia session range. Now, for those of you who know me and you've been watching my content, you know that I love the Asia session range. I
Mentions it again. Asia needs to be, the lows of Asia needs to be swept with long.
love to use the high and the low as liquidity. On top of that, so we're going to map out our Asia session range, right, which is right here. So that's a pocket of liquidity. We have the Asia session range low as another pocket of liquidity. We have an old high here in the form of this high right here that acts as liquidity. We have this high in here, which again acts as liquidity. We have equal lows in here, which all act as liquidity. Now you may be asking, why are they liquidity? Let's dive into that. So what is liquidity? In a very short, brief description, liquidity stands for obviously money, right? Fluidity of money. And ultimately, when we're looking for liquidity, all we care about is where are the stop losses, where are the take profits, and where are the entries. Because every time one of those things happens to a trader, that is liquidity coming into the market, right? So for example, if you have an order placed, then when that order gets triggered, you will either enter buys or sells into the market. So money flows into the market. When you get stopped out, so when you get a stop loss, that stop loss doesn't take you out of the market, it actually puts you in the market in the opposite direction, right? So for example, if you're looking to long the market and your stop loss is down here, when price hits that stop loss, this triggers as a sell position, right? So we have stop losses, entries, and then take profits are exactly the same. If you're, let's say, shorting, right, and your take profits here, well, when you hit that level, that is going to activate as the opposite side of this. So you'll buy back the position and you'll take the piece in between, right, the speculative profit. That is liquidity. So now you have to ask yourself, where do people put their stop losses, where do people take their profits, and where do people get into trades? And the most common places for that is things like trend lines, equal lows, equal highs, time-based highs, external swing highs, right? These are all areas in which people are looking at taking profits, getting into their trade, or stopping their trades in a loss, right? So if we look at this picture right now, this is what I see personally. I see we have this internal structure that a lot of traders will be looking at. And when you see this internal structure get broken, right, so we go high to low, a lot of traders are looking at that and they're thinking that now it's time to short the market. So if there are sellers that are going to get involved in these levels in here, where are they going to put their stop losses? They're going to put their stop losses up here. Okay, so that's one form of the market. And then you have, let's say, price coming in here and pushing out like this. So we're coming into London session now, and there are some traders that are looking at this and saying, oh, look at this, we have this double bottom here, right? So therefore, that to me says that price is going to trade higher. So there are two types of traders. There are the traders that are executed on the way up, and where do they put their stop losses? They put their stop losses here. They probably put their take profits up here at this high. And then there's another type of trader. The other type of trader says, I'm going to wait for one more confirmation. And when price comes back down here, then I'm going to buy. So I'm going to put my entry here, and maybe I'll put my stop loss at this low down here, right? For example. So you can kind of see right now, I'm going to buy. So I'm going to put my entry here, and maybe I'll put my stop loss at this low down here, right? For example. So you can kind of see right now, again, another one could be, okay, well, we're shorting here, price is put in this high right here, and then we pushed out. So this is a temporary area of resistance. So I'm going to try and short the market here, and I'm going to put my stop loss here, or my stop loss here. So again, in just this one short, brief piece of price action, you can already see how so many different traders will see so many different things and make decisions based on those things. And ultimately what they do is they put their take profits in, their stop losses in, and their orders in, and that all acts as liquidity. But what we want to do is we want to most of the time wait for everybody to be taken out of the market. So in this example right here, right, we have step number 2, we are pro trend. So we're looking to long, and we have buy side liquidity, sell side liquidity. So what do you think I would want to see? Well, I would want to see a run of the sell side liquidity because I want to be buying. So I want to buy into the sells because that's what smart money do. And then I want to target the buy side liquidity. I want to target these highs. I want to target these highs. And that would be what I would see smart money are going to do, right? Because if smart money need to buy, they will first sell into the pocket of liquidity so that we induce all of these sellers and they don't have to initiate so much capital to get to where they want to go to, right? Again, that is a very brief understanding of liquidity, right? Don't lose one. Let's go into step number 3. Step number 3 is we're actually going to partner order blocks or key areas of supply and demand, right? So order blocks essentially are a way to identify key areas smart money are involved. So we have the same framework, right? Step number 1, we have our directional bias. We are bullish, right? Amazing. Good stuff. We're looking for longs. We have all of our liquidity, right? We have our buy side liquidity, our sell side liquidity, and our buy side liquidity in here, right? Now what we would need to do is we would need to
I just wasted time. That's crazy. I just got distracted. I just like watched a few reels, but a few reels that felt like they were real, if you know what I mean. But that was such a corny ass joke. Never making that shit ever again. But you guys can see the sun's fucking up, like completely bright out there now. As you guys can see, it's completely out right now. It's 7 in the morning right now. I don't think there's gonna be sunlight today because what's that? My fucking camera's weird, dude. Sometimes it like loses signal. What's up? Anyways, this is a one hell of a stream, and this is the usual time where my friends are getting ready to go for their usual, casual lifestyles. You know what I mean? But yeah, I gotta turn off these fucking lights low key. Give me a sec. And yeah, there's people. I think there's some guys here at my crib. I gotta go to sleep though. So yeah. So basically, not guys, but like this, they will deal with my parents basically. So yeah, that's pretty much.
Identify an area of interest that we would be interested in by giving a reaction.
Gonna watch this final video and just go to sleep right after because pretty much that's what I'm supposed to do, right? So yeah, broski, I'm fucking exhausted right now. What's up? What's good? Why am I staring at myself? It's fucking weird. But anyways, just try to resize this bullcrap. There we go. Okay. Yeah, there we go.
To and us getting involved in, right? And again, that is always some sort of sell to buy that caused the breakup structure, right? And again, if we look at this, it needs to be below the area of liquidity. So if we look at this right here, what do we have? We have the perfect order block setup, right? We have this perfect sell to buy candle that leads to the breakup structure. And where is it? It's positioned perfectly below this area of liquidity, right? So that right there would be our order block. And that is
okay.
All step 3 is about. Step 3 is about identifying a key order block in alignment with the direction we're trading. So if we're trading long, we need to find an order block, an area of demand, right? Can be a range, can be a single candle, an area of demand inside of this bullish price leg, so that when price comes back to it, it hits those orders and then shoots off. What is an order block? An order block is, in essence, an area of price where we expect and can see that there are a large amount of orders already sitting there. So think of a roadblock, for example, right? If you're driving at 100 miles an hour and there's a roadblock there, the car will not be able to get through the roadblock. That's exactly what an order block is. As sellers come into the market, they're met with this demand, right? They're met with this buyers from this order block level, which is smart money. And no matter how hard they try to sell, they will not get through this level because there's so much money in this level. And inevitably, what usually happens if you've got everything else right, is price will come into here, right? These orders will get triggered, and then you'll see price rocket off like that.
I'm expecting a reaction at the order block demand level. Order block plus manipulation plus plus pullback entry B or fair value gap. 1 minute. Simple as fuck. It's basically what I gotta do. So yeah.
That is the concept of an order block. So let's move into step number 4. So step number 4 is the trading strategy. Ultimately,
this is really the market sort of shift, or the internal term high being broken over here. You see the pullback towards this order block, and then we take it towards the high.
The trading strategy is how to get in and out with money. Very, very simple. So
make profits, in other words.
The brief. We've just been.
This high has not been, swept, obviously, as you can see.
Through the first 3 steps, and we're combining them all now into the trading strategy. Now, bear with me because after we've been through this one, I'm going to go show you how this looks in the live market and show you the exact trade that we took on Friday using this exact system. Okay, let's go. So, first,
hold up, I forgot about someone. Just randomly realized. Okay. What the fuck? Why is this shit? What the fuck? Alright, I'm definitely going crazy right now. Why is there... What's the song? Can't help falling in love with you. Playing on top of this bullshit fucking dog. Literally faded with a fade number 3, as you guys can see. He got the dog in him with sunglasses on him and shit. It's trippy as fuck like that. Look at him. It's pretty fucking cool. Look at him. I don't know why I just said all of that, but yeah. What diff? What I imagine. Oh my god. I don't know. Whatever. 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 Okay, what am I doing? Okay, I gotta lock in. Gotta lock the fuck in. Alright, so just lock the fuck in.
First things first.
Let me lock my camera on the side of the thing. That kind of rhymes, low-key.
The whole lines, right? So the lines that are filled, that represents the 15-minute time frame. The lines that are dashed, like this, so these ones here, that represents the 1 minute time frame, right? Okay, let's go through step by step how we just learned. Step number 1.
Manipulation into time I broken pullback entry.
Was what? If you said directional bias, you're absolutely correct, right? Step number 1 is our directional bias. And we've already established that we are bullish, right? We are trading from swing low to swing high. That is our trading range. So we're bullish and we're looking for longs. Now let's move to step number 2, which was what? Identify key areas of liquidity. We had, all of the liquidity in these highs, and the liquidity across these lows right here. So what we want to see is a run on this sell side liquidity, which I said to the community members, a run on the sell side, and then wait for price to get into our order block, which takes us on to step number 3, our order block, the area in which we expect there to be a large amount of orders sitting inside of. So step number 1, we're bullish. Step number 2, we identified our liquidity. Step 3, we have our order block that sits right below that liquidity perfectly. And step number 4 is putting it all together. So what we do is when we get our run on liquidity like we expect, when we get into our point of interest, which is our order block on the 15-minute time frame, it's our job then to drop down to the 1 minute time frame and wait for our entry model, which is what I said when I said LTF, confirmation, right? Lower time frame confirmation, which is simply just understanding that if the 15 minutes bullish, but it's coming for a pullback, the 1 minute time frame on the way down is going to be bearish. And it's very simple. So as the 1 minute comes into here, you can see that it's bearish, right? It's putting in lower lows, lower highs, lower lows, it's bearish, right? But then we get into our order block, and to confirm that this order block is truly what we think it is, where there are lots of money inside of this level, to confirm that, we need to see the shift in real time price. We need to see the shift from bearish 1 minute to bullish 1 minute. If we get that, that is the final piece of the puzzle, because that tells us that we were correct. There are many, many orders in this order block level, and that is why the buy orders are kicking into the market. And so once we get that, then we just repeat the same thing because it's fractal. We get our change of character, right, which tells us we'll go from bearish to bullish, and then again we wait for a order block on the lower time frame, like the 5 minute time frame, and then we will take our entry at this level here, right, at this demand zone, wait for price to tap us in, and we'll take our profits at the old liquidity, at this liquidity, and at my favorite 1 to 5 fixed take profit level. So let's go ahead and put all of that together into the actual charts. Let's go. Okay, here we are on the 15-minute time frame, euro dollar. You can see it's Friday the 24th of May. Let's go ahead and do this. So it looks very, very plain and very confusing right now, but you will very quickly understand where we're coming from. So from a structural perspective, which is step number 1. Now, you know by now if you've been watching my videos, we have specific rules for market structure. If you haven't, after this video, go and check out market structure video. I'll link it down in the description. But before we do that, let's run through it. So step number 1 is understanding the market structure. Well, I know because I've traded the price action that this was a swing high, this was a swing low. It meets our pullback criteria, which you will learn in other market structure videos if you don't already know. And then you go higher high. So step number 1 is we're bullish, right? We have a break of structure to the upside. We have a break of structure. This is our swing high, and this is our swing low. So that is our trading range. That's all we're concerned with. We just want to know where is our structure. Are we trading higher? Are we trading lower? Where are our swing points, right? So we have our swing low, and remember, if you remember correctly, this is our protected low, right? Just as we spoke about when we were in the theory. And then this high right here is our targeted high, right? This right here is our targeted high. That being said, our conclusion is step number 1, we are bullish, therefore we're looking to long. Now I'm going to turn on my special indicator. This indicator just tells me pretty much the sessions, right? So the blue box, just like we did in the theory, represents Asia. Now, I know that Asia represents a large area of liquidity. So if we have step number 1 bullish, step number 2 is all about identifying liquidity. So what I now need to do identify all the pockets of liquidity in this level. Well, number one, and the most obvious, is these targeted highs up in here. Right? That is a huge portion of external liquidity. The other pockets of liquidity are, if you look closely, right, across all of these lows, you'll see trend lines. These trend lines indicate liquidity because there will be a lot of traders that will be looking at selling this trend line, right? They may be in sells, they may not be in sells, but if they are, their stop losses are going to probably be somewhere up at these highs as well. Right, so we have a bunch of trend line liquidity. Again, we have old highs, just random swing highs, right? Any old high, old low. Why are those highs and lows liquidity? It's very simple. It's just a logical area in which looks to be safe. We have old highs, just random swing highs, right? Any old high, old low. Why are those highs and lows liquidity? It's very simple. It's just a logical area in which looks to be safe from the human mind, right? So where we put our stop losses, where you put your stop losses, and where everybody puts their stop losses all in the same place, we all try to find some sort of logical high or logical low to place our stop loss at that level. Because again, we understand that it is the most sound place to put your stop loss from a logical perspective because it's a swing point, right? So you just understand that every swing point that sticks out like that, there will be sound, some sort of logical high or logical low to place our stop loss at that level. Because again, we understand that it is the most sound place to put your stop loss from a logical perspective because it's a swing point, right? So you just understand that every swing point that sticks out like that, there will be stop losses in there. And there may not only just be stop losses, there may also be orders, right? For example, there may be a bunch of traders looking at this level, waiting for a breakout to be able to go long. And then that breakout, it adds liquidity at this level and then adds more liquidity at this stop loss.
Indeed. Yep.
Again, there's so many different reasons as to why there could be stop losses, as to why there could be liquidity, right? So this is another area of liquidity. You can see across here, we have all of these stacked highs, right? So what we'll do is we'll just pull out this high and go across here. There's a bunch of stacked highs, which again, people look at that and saying that this is an area of resistance. But not only do we have a bunch of stacked highs, we have relatively equal highs, right? So this high to this high here, they're relatively equal, which means obviously area of liquidity. Not only that, one more is Asia session high. And it's currently London session high, right? So this is London right here in green. London is still going on. We have relatively equal highs, right? So this high to this high here, they're relatively equal, which means obviously area of liquidity. Not only that, one more is Asia session high. And it's currently London session high, right? So this is London right here in green. London is still going on because that's the session I mainly trade. So London is still going on, but at the moment it's putting a high at this level. So there's so much liquidity in this high and in this high right here. So there's more liquidity. Where else? Asia low, obviously, right? Asia high has it, Asia low has it. But if you just look to the left, you'll see not only do we have Asia low, but we again have relatively equal lows, right? Area of support. Some traders look at it, some traders look at it as equal lows, right? So a lot of traders, because price pushed out here, come back here, and then pushed out again, this now acts as an area of support, and for some reason we'll just randomly start trading higher, which is fine. Let them believe that because we understand that we're going to use that liquidity to get into our moves. So that's fine. But that is, again, another area of liquidity. So that completes step number 2, right? I've mapped out all of my different areas of liquidity. Trend lines, external highs, internal highs, equal lows, equal highs, Asia high, all of these different types of liquidity, they're all ready. Now, step number 3 is to identify my order block. So I need to look at this price line right here, and it's, again, very, very simple. It's the final, so this is the sell, right? This is the range, this is the sell to buy, and we want to just literally narrow it down to the final candle and pull it across, right? It's that simple. That is our order block. That is the final point, right? You can very clearly see that before price traded higher, there was an aggressive sell into this order block to trade out. Therefore, this level acts as our order block, right? It's the final sell to buy that broke structure, right? And it leaves behind this, and then price comes back to it and then shoots back off. That is exactly what this level represents in here. So that is step number 3. So to conclude and to kind of, overview. Step number 1, we have our directional bias. We are long because we are bullish, therefore we're looking to long. Step number 2, we have all of our areas of liquidity that we want to target and that we want to see run before we get involved, right? A lot of traders may make the mistake of looking at this right here and London opens and like, yeah, we're bullish, okay, time to long. Hello, you haven't waited for the clear out of the liquidity. And lots of times when London opens with this little push up, everybody's FOMOing in, price is going, and that induces them to get involved. And what does that do? That puts more liquidity at these lows. What we did and what we told our members to do is wait for this liquidity to be taken, wait for price to come into here, look for a lower time frame confirmation, and then long. And so you remember my exact instructions were wait for sell side run on liquidity, which simply means wait for these equal lows to be taken out, then wait for price to get into this order block, and this is all step by step, and then wait for the lower time frame entry model, right, which is, as we know, the 1 minute time frame shifting from bearish to bullish, like we just practiced in theory, and then long into the buy side liquidity, so 1 level of liquidity, 2 levels of liquidity, and 3 levels of liquidity. That's the exact game plan that I give. That's the exact strategy that I just outlined to you in the theory. Now let's walk through it practically. So let's pay price and wait for price to get into this level. So there's the run on liquidity, very aggressive move through all of those stop losses. But not only do we have stop losses, right? We also have many traders that look at this level, that's an important level that's now being broken. And what are they doing? They are shorting the market, right? Because they've seen this important level be broken. This resistance is holding, support has been broken. Let's short. Where do you think they're putting their stop losses? Above this support level or above this other logical high that's extra safety, right? It's all about understanding other traders and their psychology. And then when we get into our order block, when we've had a run on liquidity, when everybody else thinks that price is going down, that is when we look at buying, because that's exactly what smart money do. If 95% of traders have to lose money, we better not do what everybody else is doing. It's that simple, right? Don't follow the herd. So that's why you have to get comfortable in buying whilst price is trading lower. So when we get into this region, what do? Do you remember? Exactly, drop to the 1 minute time frame. So here we are on the 1 minute time frame now, and all we've done is zoomed in, right? Nothing's changed. We still have the same bias. Price is still going to do the same thing. All we've done is just zoomed in. So if you look at the 1 minute right now, if you do the same theory,
Zoom high needs to be broken.
price was bearish,
So
and then it was bullish, and then it was bearish, and then we had a pullback and a lower low, right? So you can easily quite see right here that on the 1 minute time frame, EU is bearish coming into our zone, right? It's very, very clear to see. So as it stands right now, we have swing high, and we have swing low.
needs to take this swing and then a pullback entry through a PDRA, ideally a fair value gap or a order block. So in this case, I would target a demand level order block or a fair value gap. And I'm expecting I don't really need to see a double manipulation on something like this on the 1 minute, because I have confirmation of 15 minutes. So I'm fucking sleepy, bro. It's like almost 7:30 where I live. So
we just wait at this point. All we need to see is a run of this high. If this high gets broken, then that is our confirmation, because sellers come in, buyers take out the
market relationships and then pullback entry.
sellers. Therefore, price is likely to go up because we're reacting from our order block. We're just waiting now to confirm that what we thought about this level is true. That is why confirmation is so important. So let's play price and see what happens. Okay, so we liquidated
Manipulation, yep.
the lows. Right, let's keep playing out what happens. Okay, so now we've broken the lows. Fine.
This is not something that I can depend on because
No problem. Like,
it's going to be a 15-minute fair value gap manipulation. So
price can go all the way down to right down here if it needs to. It doesn't matter. We're not bothered. All we're doing is waiting for confirmation. So now we've gone from high to lower low to lower high to maybe lower low. So right now what we would need to see is this high be broken. Right? We just keep following it. And again, we just keep following it. Keep following it. We're still inside of our level, right? We are in no rush to do anything. We simply just want to keep following price to see what price will do, right? If price doesn't give us what we need, then fine, we don't act. What happens? One more run. So now we have lower low, lower high, lower low, lower high, and currently lower low. So again, we just move our swing high. Now, if we want to get this level confirmed, it would need to break this high. So this high becomes invalid, right? It's literally that simple. Okay, so that's just liquidation. Keep playing price. Okay, so now you have it. Price has officially been changed character. We've had lower low, lower high, and lower low, right? So there is
order block retest over here.
Our change of character. So now what we need to do is we've confirmed that this is the level, right? We've confirmed that we're ready to long from here. We've now confirmed it with our lower time frame shift in structure, right? We've gone from lower lows to high high, which tells us that this area is confirmed. Price is ready to go higher. Now we need to find an area of interest that we can look at taking the trade from, right? So what I do typically is go to the 5 minute time frame to try to identify an order block, right? An area of interest. And what I will always do is where was the most recent liquidation, right? So we can see here that we had a low, price pushed up, then sold off and liquidated this low. That's a liquidation, right? And then I want to identify, well, what caused that? So we see price pushed up and then we sold, right? So sellers came in, sell orders came in, liquidated the low, and then this is where the momentum came from. The momentum comes from this candle right here, and then it doesn't stop. Therefore, that is literally our order block. That is the area in price which price will come back to, or potentially come back to mitigate, and then continue. The exact same concept as this, just in a more refined, zoomed in, and fractalized perspective. So what would I do? That is our time to long, right? We're going to put our entry on here. We're going to put our entry on here. We're going to put our stop just a little bit below, right? Give it a little bit of room to breathe. And where do we target, right? So for me, always take profit number 1 is fixed at 5 risk to reward. So I go right here up to 5 risk to reward.
Okay.
That is every $1,000 that I risk, I gain $5,000. My second take profit, I want to just go for the liquidity, right? I want to look at the liquidity, right? It can be this high or it can be this high. I just want to see some sort of liquidity get taken out, right? So we're going to take out this liquidity in here.
It's all failed swings, so obviously it needs to take it out.
And then finally, I will leave a small amount of the position on to take this high, right? Because overall, we're expecting from a 15-minute time frame, if we zoom out for a second, right? All we're expecting is that price is bullish. We're going to make a higher low and then a higher high, right? That's literally it. It's just trading the 15-minute structure along with some other confluences and understandings. So notice as well, what do we have? We have a bunch of trendline liquidity ready to be taken out, which is awesome. So let's play price, play price. All we're expecting is that price is bullish. We're going to make a higher low and then a higher high, right? That's literally it.
I need a screenshot of this. Yo, it's low-key, like, this is becoming easier every single day, though. Like, now more than ever, so...
It's just trading the 15-minute structure along with some other confluences and understandings. So notice as well, what do we have? We have a bunch of trendline liquidity ready to be taken out, which is awesome. So let's play price, and there you can see that we are tagged into the position, right? So the position's open. So it comes a little bit deeper. Make sure that we get tagged all right. Price hovers around the level, and then once we break this level, you can look at moving your stop loss to break even, and then just wait for the rest of the trade.
Yeah. Because there's no way it will like reverse at that point. Auto block entry. Targeting this as your stop loss. So this is my stop loss at this point. Bro. Stop loss. Right. And you have this. Basically the 15-minute drawn liquidity, which is your TP. And yeah, that's basically what I'm expecting price to do. And that's yippee. Let's go. And life's great, life's amazing, life's beautiful, life's yay.
Trade to play out. So we've got a 5-minute time frame just so that we can see how this trade plays out a little bit faster. We have take profit level number 1, we have take profit level number 2, and we have final take profit level number 3 up there. So pretty quickly, our first take profit of 5 will get smashed. So $1,000 turns to $5,000. That gets smashed, and we're going to take off half our position. TP2 gets hit very quickly after, because you have to understand the price is like a magnet towards liquidity. It just wants to go to where is all the liquidity, right? So take profit number 2, which is a 1 to 8. That's where I'll close the majority of the position now, and then I'll leave a little bit running all the way up here for these highs up in here. So now we've come to the live market. You can see that there is a small amount of this position still running, and this is how it looks right now, right? So the price is coming back down, but I'm looking to potentially long again. But majority of my position is closed here, majority of my position closed here, and a little bit of the position running up to these highs. Now, if you found value in the video, don't forget to like, subscribe, comment down below. But a small amount of this position still running.
Guys, basically, it's almost 7:30 right now.
And this is how it looks right now, right? So price coming back down, but I'm looking to potentially long again. But majority of my position is closed here, majority of my position closed here, and a little bit of the position running up to these highs. Now, if you found value in the video, don't forget to like, subscribe, comment down below what video you want to see next, and check the links in the description for some exclusive content.
Cool. Amazing.
90% of traders lose money because they don't know about smart money manipulation. In this video, I will reveal the 5-step process that big money uses to trap unprofitable retail traders time and time again. So here is the overall model that we're going to be depicting in this episode, and I'm going to break it down step by step. So let's go ahead and get into step number 1. Now, phase number 1, and what smart money love to create before they're going to make a very large move, is going to be the range process. Now, most of you guys should already know what range is, but pretty much range is when price gets caught between a high and a low, and it's just moving sideways, right? Some of you might think of it as sideways price action. Essentially, you'll have some sort of swing high and some sort of swing low. And then what price will do is price will range in the middle of this and give you sideways price action. And lots of traders don't understand that this is actually done on purpose. You see, by doing this for an extended period of time, what they're doing is they're inducing the other side of each market into essentially forming an idea of what price is going to do. And so when you look at this, what I see as a smart money trader is I see a liquidation of a high and a liquidation of a low. So this is the model that we're going to be breaking down. And each part of this has its own unique phase. And so I'll walk you through phase 1 to 5. Let's get into phase 1. Phase 1 is known as the range. A range is simple. It's when price gets caught between a high and a low. Now, many traders look at a range and they think that nothing is actually taking place. But this is the first phase for smart money manipulation. Because what price is actually doing when it's ranging is it's creating liquidity on both sides of the market. You see, there are millions of different traders looking to trade long and short for a million different reasons. And so when price ranges inside of a high and low, there are many different traders who are looking all at the same piece of price action and formulating different ideas and different plans, right? So you have one side of the market who may be looking at these highs. So we had one high, we had another high. That is ultimately respect, and that creates liquidity, right? What does that? How does that create liquidity? Well, essentially, you're looking at short traders who are looking at this area as an area of resistance. You see, price taps in once, trades away, comes up again, trades away, comes up again, and trades away, right? So now they're looking at this area that this is a key area, and so maybe,
bro, my eyes are fucked.
There are traders who want to initiate sell orders in these regions, and where they're going to put their stop losses. They're going to put their stop losses in here, above this resistance level. That's one side of liquidity. What's the other side of liquidity that sits in this area? Well, you'll be looking at your breakout traders. You see, there are traders who are looking at this. Maybe they have some sort of pre-frame bias, and they're waiting for some sort of price to come in here, break this high, and what will they do? Essentially, what they will do is they'll initiate buy positions in these areas. And so they'll initiate those buy positions, and again, that is more buy-side liquidity that gets initiated in the market. And a lot of them will put their stop losses in probably places like this, right? A safe area where we have a low. And then if we look at the other side of the market, we have something very similar. We have the support traders who maybe have a pre-formed bias to go long, and they're looking at this area as a key level in which price has respected over and over again. And so you have a bunch of traders who would look to get long from this area, and they would put their liquidity, right, their orders and their stop losses at these levels. And then again, you have the same thing with breakout traders. There are lots of traders who would look at this and they're waiting for something to happen. There are so many breakout traders that see a range occur, and what they do is their whole strategy is wait for one side of the range to break and will enter with that break of that range. Well, what that does is it induces liquidity, right? It induces buys, sells, and stop losses. So what we want to do is we want to understand that characteristic. So why is it that smart money uses this range? Well, let's go to phase 2 and take a look at that. So phase 2 of this smart money manipulation model is the liquidation phase. You see, what price will do before it wants to go into desired direction. Let's say, for example, in this model, you know, smart money wanted to take price higher. what they would first do is they would sell into an area of liquidity. So they would take out these lows, they would take out these internal lows, because what they want to do is, if smart money are buying, they need to create a perceived supply of the said asset that they're trading. Why? Because they need that liquidity. Every buy transaction needs a sell transaction. And smart money, with a large amount of money they have, they first need to manipulate price to go in whatever direction they want to go to. For example, smart money want to buy, right? But if they buy, they may not have enough sellers who are willing to take the other side of that position at the price that they want. Because again, they're moving billions and billions of dollars in transactions. So what do they have to do? They have to create the other side of the market. That is what the manipulation is. So if they want to buy, they are first going to create a fake area of supply. They're going to create inducement, right? The process in which they will get short traders to look interested in the market. So like we have here, they will first push price into this level, right? And it will liquidate lows, and it will liquidate lows, and ultimately it will induce so much liquidity. We have buyers who are getting stopped out of their position, right? Buyers at these levels of price who are putting their stop losses down here. Well, they're getting stopped out of their positions. And when a buyer gets a stop loss, that triggers sell side liquidity, right? So liquidity on the sell side. So they can create that much liquidity, so much liquidity that they can use that to initiate their buy orders. They will get a better average of their price. So they want to buy in here, they'll first create sells in here so they can match their orders with the sellers and get a better average of price. Now let's move on to phase 3. So here we are in phase 3, and phase 3 is the initiation phase. This is where smart money show you their real hand, the direction that they really want to trade in. You see, we've created this range, we've created sell side liquidity, buy side liquidity, and then we've had the liquidation, which was phase 2, right? And the purpose of that liquidation was to create the opposite side liquidity so they could get better averages in their orders. And again, smart money have more money than any participant in this market. So if they want to move price to a certain area, they need to create a perceived demand or supply on the other side. So that's what they do. And then what you will do is you will wait for an initiation. That is them initiating on their intention. And it will look like this. After we have this manipulation, right, the liquidation phase of price, you'll have a market structure shift in the opposite direction. So we've just gone from something like this, putting a series of lower lows in, we've run into liquidity, and then you will see, then they will look at taking price higher. When this high breaks in here, that is your sign that smart money has just initiated their true potential, their true initiation. So where do we go from here? This takes us into phase 4. Phase 4 is the mitigation phase. This is essentially where their objective becomes mitigated. Once they've initiated price, they've shown their hand, you know the direction that they're going to trade in, price will come into phase 4, which is the mitigation phase. The mitigation phase is essentially returning back to the area that actually manipulated and then bought, right? So again, smart money in their manipulation, they are using their liquidity, right, their capital to manipulate price. So they will sell into this level to capture all of the liquidity to create so much supply, and then they will buy that supply with all of their demand. Once they do that, what they now need to do is 2 things. Number 1, they need to cut the losses from the short positions. You see, when they put these positions in here, these are all short positions. So for a short period of time, they'll be running in drawdown. These positions will be in a loss the higher the price trades. So what they need to do, before they take price to where they want to take price to, they need to bring price back so they can close these orders at a better average, right? Sometimes it's a break even, sometimes it may be a small loss, but that loss is nothing in compared to the amount of money they'll make in the process, just risk management. And the second phase is that ultimately, smart money, if they want to really initiate a position, a long-term position, what they need is a large amount of orders, and they can't fill all of those orders in one. So what they will do is after pushing price, they'll leave resting orders in this price leg. So when price comes back, as it naturally will, as sellers will enter back into the market, price will return back to the area in which they can do 2 things: close their losses from their sell positions and essentially put their other orders back into the market to continue moving price. So now they've got 2 sets of their orders in. And this is a process that they will do continuously until eventually they have completed their objective. And so if we come back full circle for a second, and this is a process that they will do continuously until eventually they have completed their objective. And so if we come back full circle for a second, phase 1 is where we identify the range. Phase 2 is we wait for the liquidation. Phase 3 is we wait for the initiation. And phase 4 is where you are going to get into the market, which is right in here.
Right.
And then phase
market structure shift, manipulation, pullback towards the PD area, and then you see this shift in structure. Target is low, basically it pulls back, goes higher. Because it needs to rebalance this price range because the highs have not been swept. Right.
5 is going to be the continuation. Again, this is where price will continue. And so what we want to do is we want to identify phase 1 through 3, and we want to get involved in phase 4 and out in phase 5. Let's go take a look at what this looks like in the actual live markets. Okay, so here we are on Euro USD, just about to open up for the London session, right? And first of all, what you can see is this blue box right here. This is going to represent Asia, right? And again, for many of you guys who know, Asia is a large pool of liquidity. It acts as the phase of the range, right? So we mapped out the high, we mapped out the low. That is ultimately our range. Now what we want to do is we want to wait for a clear sign of manipulation or inducement. So if we play price out, what you'll see is that price actually, before going right into this level, there is actually an aggressive buy out of this level. Now, why do they do that? They create this to what? Create inducement. So that when price comes into here, there is again more available liquidity at these levels. Because now what we have is a bunch of stop losses and more orders below this low. And that is what they need. They need that liquidity that sits under here so that they can trigger their real move into their desired direction. The thing is that there are a lot of traders in these levels. You may be one of them yourself. That sits under here so that they can trigger their real move into their desired direction. The thing is that there are a lot of traders in these levels. They need it at these levels. They create this to what? Create inducement. So that when price comes into here, there is again more available liquidity at these levels. Because now what we have is a bunch of stop losses and more orders below this low. And that is what they need. They need that liquidity that sits under here so that they can trigger their real move into their desired direction. The thing is that there are a lot of traders in these levels. You may be one of them yourself. You may be that trader who tries to buy this area of support. You may be the trader who tries to sell on the breakout. You may be the trader who tries to sell on the breakout and the retest level, right? So all of these different interaction levels have a bunch of different liquidity sat in them, but nothing from the liquidity that smart money actually want to initiate, because they're trying to create the opposite side of the liquidity. So what we see is this as inducement. We have relatively equal lows down here. We have our range high to our range low. And if we just play price out, you'll see that again, what happens? Price comes into the low, has this rejection from it, which tells what? This tells the buyers in this level that this price is a level that is worth respecting, because price comes into the level and has this reaction out of it. That in of itself may create more liquidity. And then we have a little bit of a push through that level, and then we have an aggressive push through that level with a reaction out of it. And so now if you look at this, you'll see that we had our range, right? We had the inducement to create more liquidity on the sell side, and now we've had our liquidation phase, right? Great. Now, if we wanted to get involved in some sort of order, we would need to see the initiation. And so what we would want to see is this high in here that actually liquidated the lows. We would want to see this get taken, because if this level gets broken, that tells us that smart money has initiated a game plan. So if we play price out, you'll see that price has now broke through this level. That is going to give us essentially this market structure shift, right? This level in which price has very obviously put in a low, high, a lower low, and higher high, right? All internal. From there, you can very clearly see that now they have initiated on their objective at higher prices. So what you can do is you can identify your order block. Your order block is essentially going to be this area here, this, right? This level in which price has very obviously put in a low, high, a lower low, and higher high, right? All internal. From there, you can very clearly see that now they have initiated on their objective at higher prices. So what you can do is you can identify your order block. Your order block is essentially going to be this area here, this sell to buy, so the sell level that liquidates price, and the buy momentum comes in all at once. Now, why is it this level? Think about it logically for a second. Smart money had to manipulate into here and initiate buys at the same time. So essentially they had to sell to buy, right? So when price comes back, they're going to want to bring it back to their level in which they had to sell into the liquidity that's sat down here, so they can close this at break even, and additionally, they can fill more orders from this level. And so what we would do is we would wait for price to return back to this level and then drop down to a lower time frame to get confirmation that this level is truly going to be held. So here we are now inside of this level. Now what we want to do is we want to drop down to a 1 minute time frame so we can look at the fractal delivery of price and if we can see any sort of shift in trend. So we look at things right now, you can see that price is obviously in a downtrend. We are in our point of interest. Now we don't want to just buy from this level. What we want to do is we want to wait for confirmation on a 1 minute time frame so that we can get number one, a better entry, but number two, confirmation that this is an actual area. Because the thing is if this area is protected like we think it is, then there should be orders that are about to be triggered. And if there are orders that are about to be triggered, then those orders should push price higher than some previous area of structure. So if we just identify everything for a second, you can see we have low, high, low, high, low, high, low, high, and low. You can very obviously see that the order flow is shifting to the downside. It's very obvious, right? As price approaches this level. Now, our confirmation is going to be a shift of this high right in here. So we'll wait and see what happens. So what you'll notice is price goes, puts in this low, a new low, price pulls back up and goes and puts in a new low once again. Now what we need to see is a shift of this high. So once you get the shift of that high, now it's time to initiate your intention, because this has just confirmed to you that smart money have just stepped back in with their initiation. And so what we can do is the same thing again, right? We can identify this final area where price sold into this liquidity before the aggressive move out. You can see that this is a very aggressive candle, right? It has a lot of momentum in it. That is in of itself a telltale sign that smart money's orders have just been initiated back into the market. So we want to use this area right here. We want to take our long position. I'm going to put our entry on the top and our stops just below the level. You can see that this is such a small stop loss. I personally would not like to have such a small stop loss. So what I'll do is I'll add a little bit of spread on the buy side, and I'll add a little bit of room to breathe on the sell side. That still gives a very, very nice size stop loss. And then where do we want to look at taking the position? If we understand that this is our phase 4, our phase 5 is the continuation. So we literally just want to target the next level of liquidity, which is going to be this external high in here. So we're going to drag our take profit up to this level, and you can see right in the order flow, if we zoom out how price delivers itself, we had our range, we had our inducement. This right here is our manipulation, right? Smart money bring price back into these areas, are able to mitigate these levels in here, and then here is our confirmation that this level is actually accurate, and now smart money bring price back into these areas, are able to mitigate these levels in here, and then here is our confirmation that this level is actually accurate, and now it's time to go long, and we look at taking out the next draw on liquidity. So let's see how that plays out. So at this point, price is tagged in and broken the high. This is a very nice level to be able to go break even. So taking your stop loss from here and putting your stop loss into this level right here, just to make sure that if price does come back down for whatever reason, you weren't actually taking in any losses. And then we wait for price to hopefully deliver back up to the high, right, the next draw on liquidity, and that
That's actually pretty smart now that I think about it. Because once you have this breaker structure, because I mean, it will take like 5-6 minutes at most, right? Either you lose the trade or it goes to the right direction and you break even. Boom. You don't really lose any money even if this thing comes back to your stop loss. that case, it's most likely gonna, liquidate you, right? So that's actually pretty smart. You can save a lot of money doing that.
reason we weren't actually taking in any losses. And then we'd wait for price to hopefully deliver back up to the high, right? The next draw on liquidity. And that would essentially be your trade idea complete. So there you have it. There is the full take profit. If you want to learn more about these concepts and how to trade them, at the moment we have a crazy offer on. You can check the link down in the description.
Very cool. Thank you, man. Appreciate this guy. I've learned like a lot of things like from this guy. It's basically the same thing, like flipped around and flipped around and just like put like with different covers basically. But yeah, I get the point, right? I get the point, and I get what he means by all this. So that's pretty cool. Breaking even, that's actually pretty smart now that I think about it. But yeah, because you're at this point you're not taking any losses at all. But yeah, that's pretty much it, guys, for now. Okay, so it is September. It's the 2nd of September, which means I need to fucking hurry up, and I need to try and basically, become profitable as soon as possible, because I don't want to really go another month of, just being unprofitable, right? But oh my god, it's like fucked up the wire. But I am in fact very fucking tired right now. So if you guys can see, it is 7:42 a.m. right now. My camera's fucking dog shit. This is my webcam, by the way, so it's like so fucking ass. But yeah, so it is fucking 7:42. Sun's pretty dang up. I'm not gonna stay up until the fucking sun comes up. But yeah, it is bright outside, as you guys can see, the fucking road. It is a Monday early morning. So I'm assuming people are usually like going to jobs and shit. So that's from like 9 a.m. or 8:30, right? So yeah, basically, this is the time that your boy right here, me, I'm gonna be going to sleep. And damn, I'm just staring at myself. What's good, man? I look like a Four Eyes type of guy. Anyways, basically this is where I'm gonna end stream. I hope you guys, thank you so much, Zero, for joining. I will in fact be streaming a lot more whenever you see this, if you do see this. And yeah, that's pretty much it. Thank you so much for watching, and I'll see you guys in my next one. Peace.